we'll mark up the charts, and I'll show you the color coding that I use for marking up my charts. And I'll answer any questions you guys have got on the sidelines there, or if you got a new idea. I love these kind of days because I get to brainstorm some stuff. I have some ideas. I kind of bounce them off people. And I used to love getting together with a couple of friends of mine on the weekends, and we just brainstorm the snot out of the markets and stuff. And anyway, we had a lot of fun, on a lot of laughs, a lot of good times. So they've, I think the vote has been that we go to YouTube this morning and not out to the Skype. So this is coming to you live on YouTube. If you're here, great. If you catch this a little bit later, that's awesome too. Everybody's welcome. It's all for free. Nobody's selling you anything here. We're just here to have a good time and learn and try and pick out as much productivity out of the markets as we can get in these kind of unstable times. It's nice to have a game plan. It's nice to have a bit of an attack on, or fight back and try and get a little bit more of a profit, a little bit more quality, better quality of life, and take charge of it yourself, you know, be in control of your own destiny for a change. So that's the whole point of this this YouTube channel, right? Trying to help you guys get better and better at your charts, reading charts, getting better at your analysis, and being more precise and patient with your entries. Let me just make sure that we're live. We are. There's 3 of you watching. Thank you, all 3 of you guys. I feel like I've got this cozy little group in my office here. We're all sitting around the charts. So welcome, the 3 of you. All right, let's get to it. Let's look at the monthly chart on Dow Jones, or sorry, at the NASDAQ. Close my door here. My wife and I were painting Easter cards. We like to hand paint our Easter cards and hand them out at on Easter. So we've just put all these kind of crazy cartoon bunnies on cards and send them out. People seem to like them better than the store-bought ones. So that's a little bit of creativity, right? Anyway, let's get to it. Anomalous, good morning. First through the door. 7 of you. Ooh, we're really growing fast here. All right, let's look at where we got for the monthly chart. So I'll mark up my charts the way I typically would mark a... let's start that one again. How I would typically mark my colors on a monthly. So I'll go 1 month fair value. Yeah, we'll call that a fair value. Yeah, even though it's an imbalance. To me, the names of them don't really matter now. The only thing that would change this for me in terms of the naming it, not that Michael had to name each one of them, and you know, some people might say that's a volume imbalance, some people might say it's a price imbalance, and some people might call it fair value. Yeah, the only thing that would change that for me is whether or not one of those, how you phrase it in terms of this imbalance here, in terms of it was sell side delivery and buy side delivery, very, very weak, like those little, how Michael gives you that painting analogy, how you kind of paint a brush down really quickly, you leave those little spots behind. Now that, if that has a graded response in terms of, does it have a fast, is it a big drawn liquidity when it's balanced on one side and not on the other, or it's delivered on one side, not on the other, or vice versa, or it's completely gapped, or it's delivered on the buy side and the sell side. I haven't determined whether or not there's a graded response in terms of which one is the strongest draw, if there is a strongest draw. So right now I just treat them as they're in very important levels that the price will, they're data points that the algorithm will come back to rebalance again later. So they're definitely data points. So to what degree and what graded response, and if you guys have a an opinion on that, I'd like to hear it. Put it in the comment section below and tell me which one you think of those. So it will either be a downward candle or a wick that ends at the, let's just say there's no wicks in here. So it's a complete gap, common gap. Is that stronger than one side delivery and not the other? Is it stronger than one side delivery and the other side delivery where you got this small little wick on either side? And of those three different types of responses you can have in there, which one is the strongest in terms of grade? Do you guys, has anybody out there actually looked at that and said, you know, of the three graded responses, we need to name it and we need to say this one is the strongest? If you got an opinion, I'd love to hear it. Morning, Lambo. Furba! Holy smokes, I haven't seen you for a while now. How's it going? And Dell, good morning. You are a fully day trader. You do a good job as well. Bigger the gap, the greater the urgency to refill. Yeah, that would be as well. If you got a larger gap, then there's obviously a draw on that. But there's many times you'll see a massive gap and it takes months to get back there, right? So it's all relative to the price, to the time frame that you're on, I would assume. So I tend to put these guys in red or pink, salmon, as my wife would say, salmon. I put those, anything in pink. So if it's a big block like that, it'll be an imbalance, fair value gap, whatever. So I will look for premium side and I will look for a discount side of the range that I'm in. So I'm going to say, see how this is all sell side delivery here? We've got one buy side, one wick through, another wick through, another. So there's been no solid down close candle. And see how we ended last month, right, or so far this month that we're in, right on that candle's high. So, and we've had a nice little pullback. So the question now remains is, are we coming back into these candles? This candle's low, it's high. Are we coming back through the mean threshold of this candle, which we obviously have already? Yeah, we're way through that already. Or do we just come back, tap this old low, this body here? Because this would be, this candle is the swing. It's inside here. So you're looking for that candle's low, or it's open, sorry, it's close, as a potential monthly upside objective that I'd be looking for. And I always put these as, oops, I always put these as bold lines. Because it's the first significant, or sorry, not the first one. This is the wick low is the big bold line, and you'll see, I'll show you. This one is the second one. And it's, this could be red. I think this is red, reddish, orangish. I tend to pick that one. So if it's not, so now I know I'm hitting the edge of the breaker. That takes out its own high, I suppose. This propulsion candle, whatever you want to call it. I'm looking for that level right there. The next downside objective I'm looking for on a monthly chart would be right here. So now I've got colors. So when I get down to the lower time frames and these start to come into view, I can say I'm now hitting that outer open of the bearish order block on the monthly candle. So it's the, as we know, the higher time frames are the bigger draws on liquidity than the lower time frame stuff. So that's the overall draw. So I look for these kind of key levels here. See how this is just a delivery on one side, nothing on the other? If we take this largest wick here, %, of that wick puts us right here. We're just going to call it watch here. See what kind of response we get off of that. And it's right underneath that order blocks open on the monthly. Okay, so I've got my monthly kind of ideas set up for downside. Upside, I want to see right here. Right there. So that will be my upside limit where I'd want to see price retrace back to. I wouldn't want to see it get back further than that and then keep coming lower. So if it starts to take out this high, we're starting to look for a refill of this level and then another run back up into this probably 21, 23. And we're right in a seasonal tendency for markets to start to make this big turn now. And in terms of TIBS, TIBS has been awesome this month. If you look at my TIBS video, you'll see the application of that on the lower time frames, and on the higher time frames like daily. It's nailing it right now. So next one I want to go to is weekly. So where are my weekly objectives? So I go to the first one, which is right here. And the weekly is important because this usually gives you your idea of what you want to aim for the whole week if you're a long range trader. And it's always in gray for me. So I put in my premium level and I put my discount levels in right away. So I know what to aim for. So if you're looking for like on a weekly basis, remember how each morning we talk about boxing, right? We have that boxing setup that we look for. We look for that internal range liquidity. And we literally look for it on a 15-second chart. We look for it on a 1-minute chart. And here it is on a weekly chart. So see how we've got this premium array up here? We get this consolidation. We break through it on a close right here. We come back, nail it right there on a precision level. And then you go down into the daily and the 4-hour to be your entry. Look for your entry right here on your 4-hour, and you're aiming for the discount array, which is down here. So you would have been into this for 2 weeks before you finally hit your objective. And you have the high, the consequent encroachment, and the low. Those are the 3 different levels. And you can also just divide this into quarters and have a look at it that way. My wife's doing her laundry while she goes out for breakfast this morning, and I get to listen to that thing sloshing away in the walls. So I apologize for the sound of the water, and it should calm down a bit once the tank gets full. So anyway, that's the upside and downside. So we're inside this range right now. So for me, if we're going to let this, if this is going to continue, we need to break through this weekly. And now you start to see where the overlying confluence is, right? We have that watch here level, and we also have that monthly order blocks open. And we haven't quite tapped it yet. So if we drive down again this week and drive through here on a close, the following week I'm looking for a retracement back into this level and start running for these relative equal lows below us here. So I'd be looking for right there for our low. Look here. So that's the sell, we'll call that sell side liquidity. I like to look here for specific moments. So anyway, there's your drawn liquidity for downside. Lots of liquidity sitting down in here. There's obviously little pockets that have not yet been filled. So if I was aiming for an even lower objective, I'd be looking for somewhere in here. I'm looking for that little pocket right there. This little pocket right here. So those are my weekly objectives, right? And there's more draw on the downside. So if we do get a retracement back into this level, now you start to go, all right, so I like this order block here. And you mark that as your weekly. I go to a dark gray here, and I go, that's a big bold line. So that tells me it's the edge of the breaker that takes out this high. I look for, so that'd be the gray breaker. And then I go for here. Obviously you go, this is how you can kind of, your charts can get super, sorry, it's hard for me to focus and talk at the same time. Your charts can get really messy. They can get really cluttered if you're not prepared to keep an eye on them, right? So this is kind of a quick little, I'll do this just down to the daily and then I'll stop there, just so you know you got some objectives to reach for during the week. And then obviously the last one is right there, and we'll put that as, it's an even more broken line. So the way I describe this is when I see it, I know that it's going to be, I know when I'm coming into the dark or the gray lines, I know I'm coming into the weekly level. And then when you start to find that these are overlapping, then you get more confidence to say, well, this seems to be the draw on the monthly, the weekly, and the daily. So I know it's fracturing as I get higher and higher. I start to go, that's, as I break this line down, or this line here, it's a nice clean line, then it goes to a broken line, then it goes to a dotted line, like it's disappearing, it's losing its, so it's kind of a graded response where it loses its strength for me. I like that to be at the wall, it hits it and turns around and comes back off. So how it acts off of each one of these levels tells me, it gives me that kind of a graded response that we're looking for. Okay, just so you understand why I'm going down to these smaller things. They're just a visual reference for me in terms of a graded response. On a higher time frame, I'll start to lose that love for this thing going lower if I start to break through the next level. If I'm down on a 1 minute chart and all of a sudden I see this little tiny dotted thing starts coming through the screen from the top because we're starting to march up, I go, okay, now we've hit this one, that's good. Do I want to see a reaction off that? If we just blow right through it, hit this one, and then start to blow through this one, I start to go, all right, we're probably going longer. I got to change my objectives for a higher time frame, on the higher time frame. If that makes any sense to you guys. So it's just a visual reference for me when I get down to the lower time frames to know what's going on the higher time frame. I used to only have one screen, so this was a great way of doing that. Now I've got multiple screens. I can put these things on each individual chart, like a weekly chart over here, a monthly chart over there, and I get a good idea of what's going on. But those of you who are still using one chart or one screen, here's a great way to kind of look at it. So if we're looking at the level we're at now, if we hit this discount erase, and we've had a nice little pop off of here, so where would we like to see it come it come back into? So let's take this range on the weekly level that we're in right now and say, what would be a reasonable place for it to come back into? 50% of that range would bring us right back into the consolidation. So that'd be a CAM 1 model. So if this does hold this week and we continue to go higher, we're looking for a run back into this range, into a CAM model entry. So 50% will put us right on there. It'll put us right inside that order block still. It'll put me above that little wick or that little dotted line area, but that's fine. Just run into that wick area, and then I want to see it pull off of there to come down. So I'm more biased now for a long for now until at least 2217 and see how what kind of response we get out of here. If it opens right now and starts to book it straight down, look for a retracement back into here. See, we've got some overlap going on here now. And now I'll go down into the daily, because I think that pretty much covers it. And this, if you look at this, we have a premium level, we have a equilibrium, close to an equilibrium level, and then we have the discount level inside this larger range. Like if I pull this from here to here, you'll see where it sits. So you got a premium level, close to equilibrium, and then the discount level way down here and here. So this is like, for me, a pivot area. So if it hits that and comes back down, then I've got my next price leg going lower. And if I get above it, then I'm looking for a run back up into the premium box way up here, right? So ideally, I want to see this sucker hold right there. That's overlapping monthly, weekly, and we'll see if that ends up becoming a daily as well. So just kind of keep your eyes on this area right here for upside. When you go down to the daily, say, where are we in the daily? And daily, I always put as a blue. So you've got this whole area right here to here. That ends up being a daily. And you see how they're all overlapping here? You see why we found some resistance at this level. Look at the consequent encroachment of this one. Look at the consequent encroachment of this this one right here. See how the bodies have respected the weekly, and the wicks have respected the daily. Key levels, right? Interesting data points. Coincidence? I don't think so. Right? Very important. They hit those levels. Now we're starting to get a nice little response above. So we got a small little guy right here. We have overlapping ones there. We got an overlapping one there. So, I like that one. Here's what can get really, really choppy for you if you're not watching carefully. See how we're back into this one. So like I've told you guys before, once we get a break in structure for the downside, here's an example of what I'm trying to map out here. So this doesn't become some random thing. You think he's just marking every fair value gap and every inversion spot. That just makes the chart messy. There's nothing organized to that whatsoever. There's a method to my madness. Let me explain this to you. So what I'm trying to map out here right now is are we going to do a retracement? And this, I'm very interested in this becoming the next price leg down. Okay, so what I'm trying to figure out now is whether or not this next drive down, if the markets continue to degrade as they expect them to, if they continue to degrade, I'm looking for this next price leg. Where's this next price leg going to begin if we're going to go down? So you have to kind of give yourself the idea of, what if it goes down? What if it goes up? Where does it change for me if it's going to go up? And where does it change for me? At what point do I expect it to change for me to start driving down? So I can catch a big long trade if you're a day trader and you like to trade the day. or you're in a swing trade and you want to try and catch this swing and then a break and start making a move for a longer period of time. You want to stay in a trade for a week or two. So here's what I'm trying to map out. When you see a structure break, right? So we see a break in market structure like here. We got this little consolidation area. We ran up, we took the relative equal highs and we ran up to a premium array way up here. Okay, so keep that in mind. You'll see why you should be marking these things out. You ran up to the premium array. We did not trade above it and extend the range. We traded to it and we kicked off of it. Great. Then you look for a market structure break. So here's your first entry. So there's the reversal and you don't get an opportunity to get in on it. So you take it from here to here, because remember when Michael talks about these imbalances, if the imbalance is attached to the fair value gap, you must include the imbalance as well. So if you take this imbalance, you'll catch the reversal. And this is on a daily chart, don't forget. So there's the imbalance. You drop below it right there and you came back and with precision, you hit it. Now you're going short. You're aiming for internal range liquidity. So you're aiming from here to the discount array right here. Okay. And this is a daily chart. We do this on the 1 minute chart every single morning. This is my setup. This is the same thing I look for every day. Same thing Hadi looks for. And we're looking for that entrance right there at precision level. Now you get short. Now you go down into here and you find that entrance right there off that box. Put it on your chart right now. And then dig down to the 1 hour, the 15 minute and 5 minute, all the way down to a 1 minute or 15-second chart and look right there for your reversal to occur. And then you catch it short there because your higher time frame is what you're aiming for. You hit it, you catch the reversal, and you're aiming for the discount array inside this larger range right here. So you would have gone 1 day, all day there. Next day opened and ran right to your objective. You could have hit it the high, the consequent encroachment, or the low of that discount box. So you just go, great, I'm done. 3 days, 2 days, I'm into that trade, right? 2 days, you kept the trade all the way back here. You would have made from 800 to, you had 800 handles. I don't know about you guys, but 800 handles is pretty delicious. It's the same thing we do on a 15-second chart, you guys. Nothing changes. Now here's the range extension. When you guys do the range extension, we're looking for price to close below this level. And there's several things you have to look for. One is, does it close below that level but does not take out the low? If it does, then you want to see it retrace back into this SIBI, or this inversion now. You want to see it trade back into the inversion and then extend the range. If it extends the range first, you're looking for the breaker that sends the run, or it's a mitigation block, depending on if it just takes out this high. In this case, it's a breaker. So it takes out that high. So you're looking for a retracement back into the breaker's low, its close, and its mean threshold, all the way up into the SIBI here, or the discount array. So we trade through it, we come back, we trade short right there. That could be your short right off of there. It runs all in the I've got to put my stop loss above this level. It trades all the way back up to right before the consequent encroachment rolls over and comes back down. So 2 days, if you would have caught this right here on the close of this day on a Friday, the Monday, you'd say, now what I'd love to see is it just come back into this level, give me an institutional order flow entry drill, and then start coming lower. And it popped up, you go, okay, well, I'll give you up to here. If it enters into here, here, I'm looking for a reversal. So you look for a reversal and you catch one, go down to the lower time frames. You'll see it right there on the hourly. Look for that reversal. As soon as that reversal occurs, you catch it because you're going short. You do not want to see it go any higher. So you look for the 1 hour reversal. You find the 1 hour reversal, that gives you a little more confirmation. Then the 15 and the 5 should give it to you as well. And then you should continue aiming for this low and your next downside objective, which is obviously this these relative equal lows below you here. So then the next thing you look for is the next discount array down here. So to make my long story short, this thing right here, this reversal, is what I'm looking for right here. See how we've traded below it right here? And now we're retracing back into its consequent encroachment, like this level right here. You see that right there? Just wait for this commercial. Skip the commercial. Oh, you can't hear the washing machine. Thank you. It's quiet, but I've got the window open, so you might hear the vent going off. It's too freaking hot in here right now. And it's -6 degrees out there, so it's nice to have a little cool breeze coming through the window. And good morning, Dal and Rizwa, or Rawaz. Lambo, bigger gap, greater. Still at break-even stage, and hang in there, Furba. Just keep studying it, man. You'll start to, if you're at break-even stage, you're way ahead of a lot of people. You're way, way, way ahead of a lot. Most people who do trading who just rush into this without any forethought. So anyway, back to this. We traded below it, came back into it. Watch this one right here. Another example. We trade below it right here. We close below it right there. And then what do? We trade back into it right here. This is all free money. You trade back into it. Look for a reversal. Be patient enough to wait for your reversal there. You catch it. Where are we running for? Discount array and or the sell side liquidity and the discount array here. And you run through it and you go, ooh, now if we can just do rinse and repeat, we rinse, repeat, rinse, repeat, rinse, repeat. Now we want to see the same thing all the way down. Now, if we don't, if we see a big haul back into here, this is a nice weekly objective. I'm okay with that. And I'm looking for a daily or a 4-hour reversal right here to give me my next price leg lower. And my next price leg lower would be, and this is just my narrative on building it. You know, you may totally disagree, which is okay. You're allowed to. You're totally allowed to disagree with this. So where would I be looking for? If I came back into this order block right here, where's the next price leg aiming for? All this relative equal lows below me here. And right back into, you won't be able to see that, this mark, the contracts we from August there. So I'd be looking for a run down to here. If it comes back in, so you kind of mark it, if you want to reverse engineer it, you look for, there's a nice breaker right there. If this is it right here, inside that imbalance up there, this inversion fair value gap here, if that ends up holding price, this is where I can expect the next price leg to run down to. Not that it's a given or a certainty, but that's where I'm kind of looking for that level. Even if it's here, I'm still looking for this draw on the weekly objective. See this weekly level down here we had marked out? Even if we get a draw back into the bottom of that, that gives us right to these old consolidation CAM model 1 entry. For that CAM model 1 will put us right there. So you look for this on you look for a 4-hour chart or 1-hour chart or daily chart, look for that reversal to occur, and you're aiming for down here. That's your next downside objective for 1 or 2 more weeks. Who knows? But just a run down into the mid-April before it makes its run back up, cleans out the original consolidation. All this should be a consolidation in here, I guess, from back there. But anyway, that's how I'm kind of picturing it in my head. That's how I'm going to try and work out where this next few weeks to a month is going to be, a month and a half. That's how I'm kind of looking at it. And I'm overlapping here. So here's our upside objectives. So if we get above here now, if we close above here on a close, Then I'm looking for a deeper run back into this range. So what am I looking for? I'm looking for at least 50% of that range. That puts me right here. So that would put this. Tell me this does not impress you, you guys. Equilibrium to 50%. So your consequent encroachment here, 50%. If we retrace that next price leg down, we'll put you right smack in the middle of that weekly objective discount array, right? So look for the, now you're starting to see it, and it kind of overlaps our CAM Model 1 on a week or a daily level, okay? So just kind of keep those things in mind when you're kind of engineering where you want to see price if our downside objective. Now, it may not reach this. I'm just trying to build ideas of where I want to go. So if it does get above here, I'm looking for that 50%, and I want to see how it acts off of there. So it all is based on Sunday's open and then Monday's holiday. So I'm expecting Tuesday or Wednesday to be the high. Tibbs is the high. You study my Tibbs Wednesday, I expect to see a high or a reversal on Wednesday. If Tuesday gives us a little bit of uncertainty, Wednesday we should see a little swing point either right here or off of here. It depends on how we act today. And Tuesday, if we waffle around in here, or if we start to really drive through this thing, look for Wednesday to put a wick up into here. And then come, that's my next price leg lower. All right. So everything hinges for me on this level right here. It's a rinse and repeat. I'm not doing anything different. I'm doing the rinse and repeat all over again. And they've got this little sibby right here. You see that? Now, we've taken out all these lows. So if this is going to be a big run back into the range, I know 50% puts me right here. So if I get above this level right here, I'm just going to zoom in a bit here. If I close above this level on today, let's say today or Tuesday, and I come back and I tap this level, I'm looking for that 50% of that range right there. I'm looking for this, and then this imbalance here again, and I'm right back into this guy right here. So I'll put this one as an upside objective as well. And what does it overlap? That little pop back into there, 50%. CAM Model 1. I'm looking right here for a 1 hour reversal and a 15-minute reversal. You'll see it on a 1 minute, obviously first, a 15-second first, a 1 minute, 5 minute, 15 minute, and an hour. If you want confluence that you're going to catch the high of the week, look for 1, 5, 15, and 1 hour with a 4 hour reversal, all overlapping. They all give you confluence. Each one of those have given you the reversal. Then you could pretty much safely say you're in the run for the rest of the week. Okay, that's how I'm going to be looking for that. So initially this week, I'm looking for a run back. We'll see how we act inside this little fair value gap. We've dug down now. We like this big one right here. And I like this little guy here. For this one will determine whether or not we'll go higher into that range or whether we'll just stick that, get a little bit of a wick up there, maybe into the monthly order block open, tap it, roll over, and come back down again. Okay, so as long as we get a body that does not close above here, I am still bearish. If we get a run back up into here, which I'm expecting a nice little pop back into here, and then a run down for the rest of the week. So the first little pop up in here, I'm looking for an opportunity to get short. And remember, after a holiday, Tuesday after a holiday, the markets can be a bit crazy because everybody's trying to get back in and make their profits. So you're going to see a bit of craziness on Tuesday. Should ease out by Wednesday and then continue on. Hopefully getting smoother for the rest of the week. So any questions with that? Dell. Brilliant. Thanks. Yeah. There is a 4-hour fair value gap above as well. Okay, so let's go to the 4-hour. Let's do this, Lambo. Let's do this, right? All right, 4 hours. So above you, so the 4 hour, see how this, we've come right back up inside this 4-hour fair value gap sitting right here. And we've hit the top of it, bang on it, and closed it perfectly on Friday. See that, how we've tapped it with precision. And now we've had a nice little pull off of that. So if we roll over here now and start to drop lower, where are you aiming for inside this range? Where are you aiming for inside the range? See that little imbalance sitting right here? If we drop down below that, we close below that, which is also the mean threshold of this breaker right here. It takes out this little high, takes out that little high, and then the high doesn't take out the highest high, but this little swing point here, that guy takes it out. It's that whole breaker is the, if you include all of it, it's a mitigation block because it doesn't take out that high. It's the last two candles that doesn't take out that high. If you look at that itself, it takes itself out right there, taps it, runs to the close of that SIBI again. So what you want to see here, Lambo, is whether or not that close, it runs up again and closes above that, which is also the daily we're looking at. I look at all, see how you, as we get down into the lower time frames, you start to see how I've built this up to look for key levels that are sitting there. And I look at these higher colors and I go, which one is the strongest draw? Higher time frames are the biggest draw eventually on liquidity, right? What we see on that 1 minute chart is the same thing we're going to see on all those other charts. So if those other charts are moving in the same direction as it would on a 1 minute chart, then I can say, where's the draw? I get a better feel of the bias of the week or the day. Does that make sense? You get a better feel of where it's going. And when you see them on your chart, you can go, ah, that's a weekly objective up there. You can't see that in here. You just go, it's just a mess of candles. But that's a weekly objective, daily objective, and a monthly objective. I can look at these other little candles in here as well. Let's wait for this commercial to end, and it is over. Any questions so far? FOMC this week, volume imbalance, boom. Yeah, right here. We just got a little price. We don't have any major volume moving in there. I like that little fella down there. So for you, Lambo, if it gets above this level right here, which is also the daily, if it gets above it, find support at it, then you want to see it continue going higher. You've got this fair value gap above you here, this SIBI on a 4 hour. You've got 50% of this wick. Look at this wick. Watch this. You'll start to see some interesting things happen now. 50% of that wick puts us into that monthly candle. It's open. We're sitting right there. 50% will just put me right up in there. And you see how it typically goes. 50% just pops above it. Well, what's it aiming for? Higher time frame. It overlaps right here. Just gives it a little pop, rolls over and comes back down. So if you see it run hit there and you go, what was it aiming for? Well, it was aiming for no more than 50% of that wick and close of this fair value gap and an overlap of a monthly open. You'll see how these all start to overlap, you guys. That's why you put them on your chart. Spend Sundays kind of sitting down. I'd love to do this. If my wife goes out for breakfast with her friend every Sunday, this would be perfect. We could do this. I love sitting down and try to develop narratives over where it's going to go for the week. And we have a consolidation model here. If we have a nice displacement and it comes back to the top of that, which is also the bottom of the fair value gap. If we have a nice displacement candle, comes back, finds support of that, and we start marching higher. Sweet. Where are we aiming for inside this range on the upside objective? What would you be aiming for, Lambo? Tell me what time you're looking at for your upside objective. I almost went for it. Tell me where you think it's going to go. Anyone? Anybody you guys can pop in there. It doesn't matter if you're wrong. It doesn't matter. There is no right or wrong. Just because it may differ from my opinion does not mean that my opinion is right. I'm just trying to develop a narrative around something. You guys can either agree, disagree, or whatever you choose. But when you're trading a range, great discussion. Oh, excellent. Glad you like it, Ollie. 9 a.m. fair value gap. Oh, right here. This is what your 9 a.m. fair value gap. 9 a.m. 9 a.m. fair value gap. I don't see your 9 a.m. Where, you know, on this 4-hour chart, where am I looking to go in here, Lambo? If you're gonna key off of this level right here, where are you aiming for? Where up here am I aiming for? As a decent objective, if you're a 4-hour trader, let's say you just like to trade a 4-hour chart, where would you aim for? So this is kind of like a practice weekend, build a narrative, but I also want you to kind of think about internal range liquidity hunt. If you're not a super sniper trader and you like to trade on a little bit longer, you like to hold your trades a little longer, and you're on a 4-hour chart, great. Look for your entry on a 4-hour. Where would you aim for in here? I'll give you guys a few more seconds on that one, and then I'll tell you where I think you'd be aiming for as your first objective. So what we're saying is if we can get above this level right here on a close, which is also the daily, we can get above that on a close. I'm looking for, clearly that's the first one, but we'll ignore that one. You get above this one, find support. Where am I aiming for as an upside objective on a 4-hour chart? 6 a.m. 6 a.m. 6 a.m. This one right here. That's an immediate short-term one. Absolutely pay yourself along the way. You got 3 different layers you can pay yourself there. Take your high to your low right down here. You want to get your discount. So you want to be in this range, like in the bottom half of that daily fair value gap. If we trade above it, you want to see it come right back to the bottom of it, hit it, and then start going higher. So you want to be in the discount portion. As soon as it hits 62%, you move yourself to break even, and or move yourself to 50%. And then if it's 70%, you move to 62, so on and so forth. You could do that method, which would get you right into the top of your inversion here, but it gets you safe. We're all about getting our trade into a safe area, because I tell you, there's so many of you out there that get so stressed out when you make a trade. And if you move your stop loss to a logical level, now I'm not encouraging you to chase price with your stop loss, but look at logical levels and say, I want to get stress free. You got to think about the cortisol levels in some of your bodies out there. Some of you guys are stressing out huge of these trades. And if you can get into a place where you can go, I'm stress free in this trade. If it doesn't pan out, I don't care. The great thing about the market is it's going to produce a ton more candles for me to get in on. And one day you're going to catch one that's big. You've moved yourself into stress free. You're aiming for that objective and you go, holy smokes, it hit it. And it was hundreds of handles. But you got to get to that stress-free place, right? Because a lot of you guys have put these things on, put your stop loss down here, and then you miss the time where it's already showed you that it's coming down to take you out, and you've missed it, and now you're holding on to it, you're committed to it, you're married to it, and now you're getting a divorce, and everything's taken, everything's gone. So get into that stress-free place using that fib tool. Is a great way to do that for an internal range liquidity hunt, because sometimes it's just a simple run to fit 70% of that range, and then you get optimum trade entry reversal, and then bam, it slams back down again. Well, what's sitting at our 70% optimum trade entry? That's sitting right at our monthly objective that we're looking for to see if it reverses and comes back lower. This price leg, the next price leg could be right here from there and running down further. So everywhere we start to see that first reversal happening is where we're going to get our confirmation and our next potential price leg lower. Anyway, the next upside objective for me is right in here. This 88 percentile right here. There's a little imbalance right there. I like that. as a potential internal range liquidity hunt. You've got this one right here above you, the SIBI. You've got the breaker, and you've got there's another little imbalance right here. So I would put this right here as an upside objective for week hourly, 4 hour. Where's my 4 hour inversion? 4 hour upside objective. And now we're starting to get into our little place where we want to start to see our reversal, right? We also have we also have this right here as well. Internal range liquidity. I'm looking for this first swing, and if I get through the here and close above that, I'm looking for a higher run. I'm looking for this order block. Yeah, it's pretty much overlap. I'd be looking for a premium array up here. So those are the next upside premium arrays I'd be looking for. If we can get above here, I want to see it go higher. If we trade below this level and start to get back into it, then I'm looking for another run on the liquidity, and we may see this end up being the high of the week, and we just auger all the way down for the rest of the week. I don't think it's going to happen, but whatever. I don't mind being wrong. It's not about being right. It's about developing a narrative in one direction and a narrative in the other direction, and looking for these key levels that when they break, you start to lose or grade my narrative for the week. Does that make sense? I like to grade everything that I'm doing based on certain levels, and I will lose my love or my lust for it going higher or lower based on key levels. And I'm no different than if I would have graded a response inside a SIBI for it to go lower. Like once we've broken it on the downside, come back into it, I want to see it hold support now, and I lose my love for that as we start to eat through it. Does that make sense? So right now you're right at the very top of it. So you want to see this. If you've now traded up to it and rolled over, come back into it, you want to see it roll over and go back lower. Like definitely go lower. If it doesn't, if it trades back through it and comes, and then you go, okay, now I treat this like it's a reversal. It's still lower than that one. You treat that like the reversal. Now I'm back inside this range. I'm bullish. I've changed my mind. I'm bullish until proven otherwise, until I see a reversal that confirms the next price leg down. And I don't care if it goes all the way to the very top again. I'm going to stay in that based on that little pivot point there, this consolidation. Questions with this? 6 a.m. 21 100, 21 100, 21 100, 21 100. Oh, you're way up there. Oh, you're really pushing for a higher time range. Just remember, I've seen people do this before as well. Be careful with this. I'm not saying you're wrong. Whoever said that, Ollie, I'm not saying you're wrong, but be careful when you commit to how many PD arrays are above or below your expectation. If you're going for 2100, 100, right? If you're going up here, how many PD arrays are there between that objective? If it's not the next immediate one and it bounces off of it and comes back down, you're going to get frustrated going, it did not hit my objective again. Why didn't it hit my objective? Well, because you've missed and you've skipped over a whole bunch of things just to aim for a higher one, unless you're on a higher time frame and you're not looking at this lower time frame stuff. So when I say specifically that question, what's next, it's in the time frame that I'm in, not the next one above, because you could be absolutely right. On a 15-minute, that's the next available PD array for me, so that's the correct one. But based on this time frame I'm in right now, is where I'm gonna base my question inside here, just so you know. So I agree with you, Ollie, if it's on a higher time frame, but on this level, there's way too many before that that's going to disappoint you and never get to your, it may never get to your objective at 21 100. Okay, just so you know. Our SMT divergence with ES taking the low of last week while NQ didn't, before inverting on Friday, watching out for closes, but could see consolidation for a run higher to next week. Last week's new week opening gap. Did some back testing with this week of March coming up. The last 6 years have had us sweeping the higher time frame sell side liquidity like we just did, and having a bullish run candle by candle, but following the probability. Yeah, it's called the seasonal tendency, right? The March always gives us a seasonal tendency. Near the end of March, there seems to be a typical turn, and it tends to seek that January liquidity pool or February liquidity pool, and then start to run back up into May. The first week of May, you should see a reversal, especially if those of you who are doing Forex charts. Look very carefully at the beginning of May. You'll see the first week of May historically makes the turn. Good analysis there, Lucas. 2 a.m. BB at bullish breaker BL. I don't know what all that stuff is you got there, Lambo, at 204. At 204. Yeah. Those trades where you were divorced, lose the house, car, and the kids. Exactly. Yeah, those are the worst kind of ones, those trades you marry and you know you're getting hosed, and you might as well just go to the lawyer and say, hand it over. Just hand it all over. Risk-free by Hadi. Registered trademark. Okay. Ollie, 2100. Oh, that's better, Ollie. I like that. That's a little more inside. Yeah, I agree. It's a little more inside this range here instead of the 21. Gotcha. That's what you meant. I agree. I know that's what you meant. Yeah, 21,100 will put you right into the close of this fair value gap here. And it brings us back into this breaker too. So inside that wick, remember 20,000 as well is also an institutional level. Check out your institutional levels. Very important. Okay. So that's my basic analysis of the week. Basic. It's a little more in depth on how I kind of go about looking for my objectives for where I want to go for the week, where I want to go for the day. Any questions with that? So remember that 21 or 2100 is in the range the moment we close above this level right here. If we can get above that daily 4-hour level and start running higher, then you look for your hourly level. Where does the hourly level supply or give us that 2100 level? Then you start to see how things start to overlap and become more precise. This daily range from here to, I don't know where the heck that one is. This looks, oh yeah, from here to here, its consequent encroachment overlaps this small one right here on the daily. They overlap. See how their data points are overlapping? So what we want to see now is a body break above here and start pushing higher into this fair value gap above us, the SIBI. And if we can get above that, then I gotta lock these down sometimes. You're looking for this right here. it overlaps this one. So I'd be looking for an hourly chart, looking for an upside objective. If you want to draw your hourly, this is where your charts get super messy. But you're right into an hourly level. So now you know, you get confirmation saying, if I'm going to go bullish now, I have a 4 hour, a 1 hour. Now you get down into a 15 minute. So I've got to get above, and there's a small one right here on the 1 hour. See that guy right there? It's the highest out of all of them. So you have to use, once you use this one up, that's the next one you use. And you watch how they start to overlap. And this is how you find, you dig down into the 1 hour, 4 hour. Now you watch when we get into the 15 minute, 5 minute, how they all start to overlap here. And that gives you your direction that you want to head for. Okay. The last upside objective on my 15 minute is this immediate rebalance right here. It's a little tiny immediate rebalance. And there's also this guy right here. There's the 15 minute right there. It's literally, it's overlapping that 4 hour. See it right there? Let me just draw this bigger so you don't think I'm just trying to find. There's nothing here. This is the highest one right here. And see how it overlaps the 4 hour? So we have a 4 hour, 1 hour, and a 15 minute overlap. You see? So if we, now if you start to take this down and you start to say, all right, I want to know where's the turning point? Where's the point and where I think all the arrays now from the lowest, when something goes up, like when you see something shoot up and then it hits its zenith, its key point, this apex, and then it starts to stop its momentum this way, hits zero, and then starts to come back the other way. That hit point where it starts to spool back the other way. So you're spooling bullish, bullish, bullish. Then all of a sudden it goes stop. It starts to spool. The 1 second chart starts to spool, show you this little inversion that starts to happen there. Then the 15-second chart, 5-second chart, then the 15-second chart all get their little reversals. Then the 1 minute, then the 5 minute, then the 15 minute, then the 1 hour, the 4 hour. And now we know that the rest of the day is going to be bullish or bearish. We know it's going down for the rest of the day. It's that spooling where the algorithm spools up, hits, reverses, and then starts to spool back down the other way. If you're watching, that's why you see Hadeen will nail a 15-second chart, is he catches those early spooling of the algorithm back inside a smaller range and larger range and larger range and larger range. And that's how you catch it, right? What I was looking for, like last weekend when we did this little, the Skype chat, this is the thing I was pointing at, is where's the point in which they all start to overlap, and at what point, on what time frame do you say, the rest of that daily candle now should be heading in that direction? And when you start to see this kind of thing here, this is the magic, where you start to see them all overlapping at a key level. So you got a 4 hour, a 1 hour, and a 15 minute right here. That 15 minute one overlapped. Back over here, you saw that 15 minute. Now, if we go down to a 5 minute, I've got to go back to the 7th here. So I'll go to 5 minute. I go to the 7th because it's too far back there now. The 7th. Go. And I look for that highest area there. And I look for that overlap. See it right here? And you'll see these slightly higher because they are, there's the 5 minute one right there. Right there. And the 1 minute, you'll see slightly higher. And the 15-second, you'll see slightly higher because they are higher, right? You'll see the turns occur higher and higher and higher. And then all of a sudden, when they start to overlap that key level, you start to go, ooh, look, there's the first one. Here's the second one that overlaps with the 4 hour and the 15 minute. Here's the 1 hour. See how they just, it all looks just so cute and sexy. So I'll put this one right here. And then we'll go back to the Friday the 7th at 1300 on a 1 minute chart. Friday the 7th, go to the 130 chart. And your 1 minute's right here. See how we got an immediate rebalance right here. This one's the highest one inside that range, so right there. We have a high. We trace through it. We go all the way back through it, bounce around in here, and then we finally drop down through the 5-minute level. And look at that mess inside there. It's a messy day. Bouncing off that 5-minute level. And then we ended up going. We ended up capping down from that point. I think that was the 9th. We opened up on the 9th. So that was the end of Friday, right? Right there. But that's the last highest high right there. Your stop loss would have been, you would have been taken on that. There's probably a 15-second reversal in there. So if here's the risk you take, right? If you take the 1 minute, if we're waiting for those higher time frames all to start spooling and overlapping, your highest risk is here. And it came back, took you out one more time before finally going lower. 15-second chart, you'll probably find a 15-second chart with a potential reversal in here. So you see how it starts to spool? And then you got your 5, 15-minute, 1 hour, and 4 hour all overlapping right there before going lower. But anyway, that's the kind of ideas I got bouncing around off of that stuff. Tibbs is a Tibbs. Let me tell you about Tibbs. When do you apply Tibbs? Wait for that commercial to end. All right, let's go to, this is what I want you to think about with Tibbs. When we see, like, here's a 55, that's a Tibbs 55 right there, right? That's the high. When you're looking at Tibbs and you're saying, I expect 50, 52, 55 are my levels, right? If I'm going like this and I'm on 54 right here, and it starts to make a run higher, I go, I want to see 55 take out this, this, this. I want to keep watching this, and I want to watch for 55 to take out whatever objectives I'm looking for. So if 55 takes out all of this right here, ends, and then 56 starts to run lower, you start to go, 55 was my turn point. I can go into it. You can go into that short. It's a turtle soup. If you're on a 55 candle and you're expecting 55 to make a turn, you look for what objective would 55 take out for me to confirm that 55 is the turn candle. Does that make sense? Then I go down into all the way down into here, and I look at remember 2 3 1 2 3 or 2 4 3 5. So here's 3. It's coming down into immediate rebalance right here, and it's coming down into this order block or this BISI. So if you're coming down into the discount portion of this range, and I say that was my high, the next candle, which would be 58, does 58 come back into the mean threshold of this candle? Watch right here. There's 58, mean threshold, hits it nicely. And you say, I want to see that 00 start to run for here, and I want to see 2 aim for here. So I'm going to go here. There's 59, 1 or 0. 1 hits right on there and closes below it. You go, sweet. If that closes below, I'm expecting 2, 2, 3, 4, 5 to start running for a discount, a deeper discount array. A, there's my first one, and B, it's the immediate rebalance and or the range, below the range, and I'm looking for 70%, 75%, whatever, the optimum trade entry reversal. And look where 3 puts us, right on the 75%. Then all of a sudden you see it pull back and start to go higher. You go, great. If it trades above here, that's my turn point, is my 3 candle. So then 4. If I say, well, if 5 comes back into my order block, I'll take that. 5 comes back in. I expect that to go higher. There's 5 right back inside the SIBI. See how well you use it now? You use Tibbs to find these specific data points that I show you guys, these reversals and that all the time. Now use Tibbs to find the perfect entry. Look for the time. And now when this comes back here and you go, if I'm looking at Tibbs, I know a 6, a 5 and a 7. If 5 brings us back in there. I expect to see the rest of this go higher. I'm expecting 7 to bring me back up into here. I'm expecting 9, 10 to bring me back up into here. So look at this. Here's 5. Brings me right back into a perfect entry on a 5. Then you go 6, 7. 7 brings me right into this area already, but I want a premium array. So I want to use this all the way up into a premium. So there's 7, 6, 7 here, 8. Look at that. 9, 10 turn right back up into premium and 50%. Now you start to see how TIBS is starting to be used for fib tools, time and price with precision. And there's only 13 of you that get to see this right now, right? Do you see that? Bobby Axelrod. I love that name. Bobby, go to my TIBS video. I explained to you precision level timing. Precision level timing. And now you guys get an opportunity to see something that I haven't really shared before. But it's using time, price, order flow, ranges, fib tools, all with TIBS, with time. And you'll see how time and price are absolutely what drive the market. Nothing to do with order flow. Does that make sense? Do you guys see how the logic of it now? You're going to start to love TIBS when you start to understand. You want to be more precise in your thing, in your analysis. You'll see TIBS and you'll go, holy crap. TIBS just nailed that level. And I expect to see a turn. You'll sometimes see me go, I want to see it stop right there. Freeze. I want to see it start coming back. Look at the time I'm sitting on. 9, 10 turn. This is something I developed years ago, and we're still getting 9, 10 turn. And what do we get on an hourly level? 9. Looking down here. 9, 10 turn. 9, 10 turn. Here's your 10 o'clock. And then you look for 12. Look at that. Oh, 12 o'clock. Well, there's a turn. That's the hourly level. Now go all the way into your month. It's fractal. I didn't give you something that's just on a 1 minute chart. I gave you something that's fractal. That's how I know it works. It's fractal, my friends. And only 13 of you are live here to see it. It's a beautiful thing. Once you practice it, play with it. But you have to be dedicated to practicing it. And there's so much stuff you guys are getting out there right now. I understand people just glaze over TIBS now. They look at so much other stuff. They say, oh, I haven't got time for that. Or I haven't studied it. Or that's fine. That's perfectly fine. But there's so much out there to know, to learn, that it ends up becoming another little thing I've got to try to perfect, right? And I get it. If it's not your thing, it's not your thing. But just to let you know, it is freaking laser precise if you have the time to put in on it and study it. Where's my baton? 9, 10 weekly turn about to happen. Yeah. Yes. And Lucas, now coincide that with what your little 6-year look back was. Right? Look at your 6-year look back. Why is this 9, 10 turn so important? Why is this week coming up so important? Now let's just use TIBS here on the daily, and I'll show you why it's worked so good this month. This is why I have a calendar I'm building, so you guys don't have to worry about doing this. Here's February or March. Right here. Starts here. 1. There's 2 turn. There's 3 turn. 4. There's 5 reverse. 6, 7, 8, 9, 10. See the 9, 10 turn? It's been a beautiful month, man. That's TIBS. Now I showed you all the way down to a 1 minute chart. That's the daily. That's the daily. Those that come across your treasure will embrace it. I tell you, when my calendar comes out, you guys, it's probably going to be a 2026 calendar. I'm still trying to. I gave Abs the full rundown on what my calendar is going to be, and he just loves the idea. I'm not going to share it all with you here because somebody will probably end up trying to steal my idea. But this calendar is going to be unlike any other calendar you've ever had. This calendar is going to be one of those ones that teaches you from month 1 to month 12. And 12, it's Christmas is your put together. So your calendar is not just one of those things you look up on the wall and ignore it. This thing actually teaches you, each month teaches you something new. And each day you look for specific things based on what I taught you in that month. And then it builds on it as the month goes on. So that calendar becomes a teaching tool. It becomes a lifelong thing that you can look back on. You can punch holes in it, put it in your binder. How's that? How's that? Anyway, that's where I want to go with it, because I love the whole idea of teaching. And I want a calendar, not a throwaway thing. I want it to be like, that's a glossy freaking calendar. I will punch holes in that because there's going to have, every month's going to have something new for me to learn, and I get to apply it. And then the following calendar will give you something new. And every year I'll just keep building on it, and I'll give you all the tips. I will give you your Forex. I will give you everything in that calendar, so you don't have to do the work. Right back at you, man. Right back at you. Those that come across, I would love to see it, but I understand. Looking forward to it. Well, sounds amazing, incredible stuff. Yeah, it's $1,000 per candle per calendar. I'm just kidding. And all the proceeds for those calendars will go to helping somebody somewhere. We'll be doing something. So you guys you're getting a double whammy. Not only are you buying the calendar for all the cool learnings, you're also going to get the calendar and knowing that the proceeds that you pay for the calendar, they go into helping somebody. They go into feeding somebody. They go into doing something good, helping some research, doing whatever. I don't know. I haven't figured it out yet, but we're going to do something good with this. We're going to turn trading into a lifestyle where we help people, and we're going to pay it forward. We're just going to keep helping people and moving and shifting forward. That's the goal, man. That's my goal. That's my happiness. That's my light. That's my juice. And stay tuned this week. I get to do we're going to give out our first, what do they call that? Oh man, I don't know why I freeze on that every time. It's a first account. So you guys get your first, I don't know why my brain keeps freezing on that. Prop firm. You're gonna get your first free prop firm account. I'm gonna pull one of the subscribers that have been with me, and I'm gonna pull your name, and I'm gonna pay for a prop firm, 1 month of your prop firm. So give it a go, and you can start to utilize some of the principles that we got here, and you guys get an opportunity. And because there's only 1,143 people, the odds that you're getting pulled out are way better than winning the lottery, man. And you may just win the lottery. If you can turn that prop firm into a paid account, then you made yourself some money, and I'll be happy for you. I'll be so happy for you if you can turn it into some gold. Anyways, that's my analysis of NQ. So let's go to the next one. We're going to do all of these today. How's that? So that's the breakdown of NQ. If you take the time, you guys get the idea of where we're going. You see why that's an important level for us. And we see why it's an important level on a 4-hour basis. We have our upside objectives. We have this little pivot, that little ball there. We're going to stick that right on top of the whatever level we end up getting to. If this ends up being just a return, like a 9-10 turn here, that's a 9-10 candle. So I'm expecting what now? Remember, Lucas, you came up with this idea? This is another one of those advanced level thinking. Now, if you take this reversal here, and Lucas was wise enough to figure it out as well. If you take my Tibbs and you say, if 9:10 is the turn, where do I expect the next turn to occur? 11, 12, right? So 9:10, I expect the next 2 days. That puts us where? Tuesday, Wednesday. And what is Wednesday? Go on your Tibbs and look at Wednesday. Wednesday is a turn day. And if 9:10 and I expect it to run for the next 2 days into a turn, and that Wednesday to be the high of the week, you'll start to see how Tibbs overlaps so many different levels and then starts to overlap on your chart, starts to overlap for key PD arrays that we're looking for on a daily chart, internal range liquidity hunt. That 12 is, I'm aiming for 50% of the range. You start to go, holy crap, man, this has so many different layers to it. Anyway, let's go to this one here. I'm not going to do as big of an analysis on ES, but I'll give you a kind of a basic rundown of what we're looking for. Any questions with Tibbs, or if you don't know what Tibbs is, go watch my video on Tibbs. Watch the video on CAM model entries too, because that CAM model I think is up and coming this next few weeks. Shut the window, my toes are cold. Ooh. All right. Any questions with that? Prop firm. Thank you. Yes. FOMC Wednesday. FOMC's on Wednesday. Ooh, that would be a nice little pop-up point. So you see how now you start to see all the confluences when you start to use Tibbs, and then you start to use it on a higher time frame, all the way from the lower time frames to the higher time frames. And then you start to say, where does the news supposedly influence our time and influence our weeks or our days? Then you start to realize where all that noise is. And if FOMC actually creates the high of the week, and it's on a Wednesday, which is a Tibbs day, and it's a Tibbs week, you start to go, and it tends to coincide with our daily Tibbs, hourly, 4-hour Tibbs, whatever. Every one of them, it works for all of them. Let's go over here. Let's look at the daily here. Look at those relative equal highs. We just popped above them right there. Started running lower. That's the daily. So do you see this, my friends? Do you see this? Daily. Delicious daily. Okay. Thanks for reviewing Tibbs. Great additional commentary. You're welcome. And there wasn't very many of you got an opportunity to see that, but those are some of the things I don't really mention a lot in Tibbs, but a little more detail. Usually when I come and visit a town, I'll share something with people that I haven't shared before. Like Lucas got to hear some things that I hadn't shared in the past about Tibbs. And Abs got to hear a whole bunch of stuff. He and I got chatting. We got our, as soon as we got our computers out, we spent hours chatting without candles and stuff. I was just like blah blah, and he gave me some really interesting stuff too, which I will work on, and with his permission I will share it. If not, then you'll have to talk to him, but he's got something that's just awesome. And I respect people. If you give me something you want me to keep to myself, I'll keep it to myself. If you want me to share it, I'll be more than happy. This is the place to do that. But you, like Michael said, you have gotten plenty of stuff to make yourself a living. You don't need to look for the next little golden key to open up the lock. There, the locks are open. The door's wide open. Run through it, man. Run through it. Tibbs is just something, another little tool. It is not the be all end all. It's just another tool. And somebody else comes up with a new little secret. It's not going to change the awesomeness of the freaking setups we give you guys every day. Anyway, here, let's get back here. So we got a break in market structure to the downside, right? We see a full body break through it. We don't get a retracement back into it. We just get a body get through it. We don't touch the retracement. We have a body get all the way through it, does not retrace, does not touch it. Keep these in mind. Keep this in mind. Another thing you want to make notes. Get your notebook out. Make notes of this. If you do not get a retracement and touch, retracement and touch, and it finally runs down all the way down to your discount box, and you run through it, you take out all these lows, you run through it, and then you start to close back above it again, right here. You've closed above it, look for a tap, and then to continue to push and look for a retap of this, a retap of this, and look where they line up when you pull your fib tool from high to low. Your first 50 is right here. It's inside the discount box of this guy right here. So we never got a chance to retap that one. We never got a chance to touch the bottom. We never got a chance to retouch the bottom of this. We never got a chance to this is that one. We never got a chance to retouch the bottom of these old lows. We just went straight down. So when you get an opportunity to come back up, those are key levels to reach for on the upside. And what is 50% of that range? That puts us for the next price leg lower. That puts us right inside, let's say, this candle right here, this discount box. Where do I expect my next price leg to go? 5169. If we just catch a reversal here on the daily, 1 hour, 4 hour, 15-minute overlap, what we're looking for, right? So 50% will put you right in that little discount box that we've already ran through, but you never got a chance to retap it. Does that make sense? This one has, you notice that? We traded through it and tapped it and kept going lower. That is premium level. You take out the premium level, you don't get a chance to retrace back into it. So we look for a little break in structure here. You come back in, you tap that last down close candle. That's the breaker that takes out those little highs. Or you could just say, this is it right here. That one's buried inside there. Comes back, taps the wick, goes lower, breaks out, takes the low on a close, comes back up inside it, goes lower, takes out the discount array, trades back into it, perfectly enters into it on a daily chart, and literally goes boop and runs away from there. From there, you don't get any more retracements. Once it clears through here, you don't get a retracement on that. If it clears there, you don't get a retracement on that level. You don't get, it runs all the way down to the discount box, runs through it, and then comes right back through it again. You go, aha. If you thought that was going to range extend, this is where you should have seen it stop on that low, its middle, or its high. The fact that it kept running through, you go, I'm on the wrong side of this. I am not going to go short anymore. I'm now in a long position. If this runs through here again and closes tomorrow below this level, or today closes below that level, and we have Monday's holiday, and Tuesday starts here and starts to go lower, then you're back into changing your mind, and you got to be able to change your mind on the fly when you get something proved opposite. Don't marry a trade. You can stay in the relationship all the time you see it working out. All the time it's communicating, like every good relationship, when it's communicating to you exactly what you want to see, and you're in it. You stay in it. If the communication fails, your relationship to your trade will fail, and down she goes. Thanks for reviewing tips. Wednesday, March 19th, 200 federal funds rate. I'll fly you down to Florida. We can rebuild and trade. Yeah, well, we can do it. Hey, man, I'm willing to come to Florida. Thanks for the morning, Darren. See y'all later. See you later, Lucas. That is superb, important, D. easy to feel like we are missing out on a key piece of education or missing out on something else. We have all we need. We absolutely have all we need, man. Any of this other stuff, I'm just trying to give you more precision. I am so picky about how we get into our trades now. It's literally waiting for that wick to hit right on the spot we're looking for. It's not a vague area anymore. It's a precise level we are trying to hit. Our level of detail is trying to get to a precise level, not a vague area with a 30 handle stop loss just for some randomness. If it fails at a certain spot, that stop loss is closed out before it even gets taken, because you know that key level fails, it's coming for you. And that's where the daily practice of our channel is all about. So I'm looking for more upside right now. I'm bullish back inside this range until we get below here. If we break below this level again, then I change my mind. I go back to bearish on a daily. So then you go down to your 1 hour chart and you say, all the time I'm staying above this breaker, I am bullish. And if I can get above this breaker, I am going to remain bullish, and I'm going to aim for up here. That's my next hourly target, my next hourly target. And then if it keeps running up into our 50%, I'm happy with that. So you're bullish right now because here's your immediate rebalance. You've taken out this low, immediate rebalance. You traded above it. You come back in, you tap it with precision, and we start moving higher. We take out our premium array right here inside the small range. We take out that premium on a close, and you go, great, now I want to see range extension. It actually extends the range, and we look for mean threshold right here. It hits the mean threshold, trades down, comes back up, and now we've closed above it. Now I want to see that mean threshold hold and still push higher. Dow Jones. Dow Jones. Oh, this is a 15-minute. Let's go to the daily on the Dow Jones. Let's go right here. Gary always tells me to make sure I hit that damn button. All right. So here's an interesting thing that I want you to see. Based on what we talked about so far, and I'm basing this entirely on something that I'd have to look on I'd have to look on the non-contract month, like the regular one, to see if this is close, if I got that right. But if you look at the difference between the daily on ES has broken this level to the upside, and okay, so I can go to this. I'm just going to go that little level right there. We have not broken it to the upside. There is a small little imbalance right here. I guess you could call that, yeah. So if we come back inside this little imbalance and start pushing higher, I want to see it get through that level and start pushing higher if you want to start looking for a run back into this old low here. But you see how, remember on the daily, I think it was the daily on ES, we want to look for a market structure break. Market structure break. What do? We come back into the market structure break and that fair value gap. Tap it, consolidation, CAM model 1 entry right there for a continuation on the downside. We're looking for this immediate rebalance down here. You come back, you hit it. Now you want to see if we get through it. We get through it, but we don't come back and retap it. We start going lower. And we just run. Now, if we start to get back into there, what level would I aim for? I'd aim for that first level that did not get re-evaluated. So I'm looking somewhere up in here, which happens to be, if you look at overall, as a retracement back into this level, we want to see 50% or more. There's 50%, and that's the little box we want to see it retrace back into. So if we retrace back into 50% of this range, if we get above this level, we're looking for that box right there. So I'm looking for it to run back into this order block, roll over and come back down. Or if it runs through that box, now I'm deeper. Now I'm really starting to look at this mean threshold of this candle. And then I'm looking for a run of those highs and then eventually a run back up here. But that's not all coming through to fruition until I see this stability here, or a little bounce off of here, eat through that level, find support, hit 50, and then more decisions as the week goes on. Yeah, see it hit that key level we're looking for on that last week. Look at it. We're nailing this. Like levels. I tell you, a level of precision you see here. This isn't all after the fact. This stuff was called during the week, so we nailed that right there. I love it. We went through it on the way down on the downside. Now we're using the underside of it. See if we start coming lower. I like this discount box down in here. See if we can get through those and then start looking for lower prices. Look for a return to this old high here. In natural gas, copper still got some upside. We still found support off that downside objective. Looking for 992. 992 right there. That's the upside we're looking for. $992. I want to see that start to run back up into here now. I want to see that get there. Gold. Gold. I'm expecting to see gold come down now. Yeah. I expect to see gold come back into this range here, at least 50% of that range. I'll talk about that in a second. AGNC. I want to see that start climbing up above those equal highs. Goliath is just returning back into consolidation and running lower. Wheat. We ran through our discount box. We came back up, found support at this. So I want to see this start to run back up into that premium box we got above us still. I wanted to see us get back down into here, and we've just bounced off that 1 minute inversion. Basically, I want to see that hold right there, roll over and come back down. Sugar, we're still looking for that upside objective in sugar, and this downside objective has finally been hit. Ooh, look there, look at that. Perfect. Nailed it. Now we're getting a little kick off of it. I'd like to see that come back into 375 and then start going higher. 375 and go higher. Live cattle hit the objective we were looking for right here on Thursday. Now I want to see if we can get above this, find support at this next level right here. No, I want to see it get above that now, find support there and go higher. Corn, I don't care about corn. Looking for its volume and balance. We're between the sticks right now. That needs to just take off from here now and start climbing above these equal highs, and then use these candles as support to push up into this break or this gap up here. Oil. You're welcome, Mr. Pips. This could roll over here. I'm going to see it get back above this level here on the 1 hour to start to run for these equal highs and then start looking for range extension. And then I'd be looking for something up here. Looking for that on the 1 hour chart. Upside, if we can get above here, upsides here, downsides here. So there's your two ranges for immediate 1 hour on oil. That's all I got there. I'm going to spend too much time on those. I'll spend more time on them during the rest of the week. I want to see a retap of this consolidation and then start moving higher, aiming for up here. If this goes lower, because we're anticipating gold going lower on a 5-minute, I expect to see this consolidation, 50% of it get taken. If we close below that, look for a run below the lows, and then look for this level right here as the support level, which I've been showing you on the other charts. I'm looking for this level right here as the level of, if we trade below that on a close, come back in, I expect to see it tap it and start coming lower. That's what I want to see. If it bounces off of it, I want to look for this upside objective right here inside this range. And if we run through that on a close, we're going up higher. And if we trade below it, which is what we're expecting on a higher time frame, I'm expecting to see this run down into this hourly fair value gap down here. If that makes sense to you guys. Let's see how we've keyed off of it. Like, tell me that's not an important level. It's a data point, man. What was that? Is that what, gold? That was gold. That's the daily. Look at this. Lows taken, immediate rebalance on Bitcoin. Immediate rebalance, come back in, hit it, take out the high. Wait, if you're not happy with this and you say, I just want to see a structure break first before I engage the market. Okay, structure break right there. Trade back into the last up close candle, hit it, go higher. You got a confirmation. As soon as you get a body above here, which is right there, it comes back in, taps it, continues pushing higher, looking for your premium array right here. If you run all the way through that, think great, it's going to go higher. Watch how this level now becomes important once it's been your premium array. Right there. Look at how it comes back in, taps it one more time. We ran out all these highs, all that upside liquidity you're aiming for, all gone now. Now you want to see, does it trade below this level? And you start to get into a deeper discount. Run back down through here. If that now finds support off of this old consolidation here to push higher, you want to see it get back through this high right here. These relative equal highs above you. You want to see it get above that, find some support at it, and push through the wick, 50% of the wick to run higher. I'm expecting to see that get back up into there. Walgreens. I'm expecting to see Walgreens get back into this discount box here. Disney. That's what you want to see, Craig. That's what you want to see right there. See how we ran, took out this low, hit that premium or that discount array we're looking for on the daily. Now to run back into this range that we were mentioning on Friday, I want to see support off of here and continue pushing up higher into this range. Look for 50% of the range here first, then that range, then look for this between the sticks above us. If we roll over and take out this level right here on a close, then range extension and coming lower. So those are your two key levels. So far we're finding support off there, so I'm bullish inside this range to 50% plus. Banks, Precision. I tell you, Precision. We've had that out there for weeks now. TD right off the top of that premium level there, or discount level. Now, what else we got? Ford. I'm looking for Ford to roll over. I like this Dodge. If Dodge gets down into here, I'm going to get some of that. DAX, we've got above that 867. We're in the sticks here now. I want to see this provide a level of support to continue pushing higher. GBP hit their sell side liquidity we were looking for the other day on Friday. That's good. Now I want to see it literally close above there. It is. Now I want to see higher. I want to see all this liquidity get taken out here now. So that's where I'm looking for next week. I'll be right back. Okay, thanks for sticking around, 12 of you. I will finish up last little bit here. So thanks for sticking around. US dollar. Let's look at US dollar on the daily. So those of you who are doing Forex trading, let's get you a Forex idea of where we're supposed to be expecting price to run. So if you look at this original consolidation, this is a market maker buy model. I'll wait for this commercial to end here. So the market maker buy model here, then we move right into a market maker sell model, right? So we have change of direction. So low risk sell, first level of accumulation right here, distribution, second stage accumulation. This is your unicorn trade. Right back up into a order block, lower, or the breaker that takes out this old high. These three candles right here, you move them straight out. You'll find that this is the equilibrium or the mean threshold of high to low. Look at there. From high to low, 50% nails it, goes lower. That's your breaker. Use all three of those candles. And you fit your 50% of that on the money, gone lower. So So that's your unicorn trade right there. Okay. If you're not sure about unicorn trade, and you say, well, you know what, I still want to see something. If I just get double confirmation, so I come back up into that level, so I've hit the middle of that or mean threshold of this breaker, I trade through it and I go, this I'd love to see, because now we've taken out this high here. I'd like to see this level here get taken on the downside. It does right there. Trades below it, and then literally comes back and gives you a perfect entry on your daily candle right there. Right off there you go. I am looking for my longs in Forex and all my assets. So whether or not it's cable, fiber, Swissy, the beast, whatever you're trading, right there you're looking for your long in your Forex pair. Okay, right there. As soon as it takes out that low, you think, sweet, I'm looking for a continuation until I get something that gives me a reversal. I am going to keep going on this this trade. So you see how this body here trades below this candle right here, which is another breaker that takes out that high, those three candles. And watch this, we trade below it right there. The body trades below here. So watch here when I'm over here. See how we trade below it? And then look how we trade back to it, right on the money at 720. Tap it and then continue going lower. So you've got multiple proof or multiple levels that show you that we're going to go lower by looking for that reverse back into the breaker, 50%, right back inside that fair value gap, that we do not get a body trade above it. Look at that. Literally the body freezes on it. Get a little wick up in there. Body freezes on it. We turn around and go back lower, and we take out this discount one here. Come back up inside. You go, oh man, we're going lower. We're extending this range, and we're going to keep going lower. If we can get below that level there on a close and just come back and give it a little kiss, you'll hear me say that so many times during the day. Just give me a little kiss and take me to the prom. That's a little kiss on a daily chart and take me to the prom. All day, you're in the absolute perfect entry for the day to go short. You find your perfect entry down on a 1 minute chart, a 5 minute chart, 15 minute, 1 hour, 4 hour overlap. Now you're not looking for the 4 hour overlap in here. You're looking for the 4 hour overlap that supports price back here. They all overlap. We did it earlier this morning. That's your homework. Go into the dollar index and find this level right here on March the 5th and post it in our Telegram channel. And that's your homework, anybody who's interested. And show me the point where it overlaps. 15 minute, 5 minute, 15 minute, 1 hour, and 4 hour overlap. And look for confirmation that the rest of the day is going to be this down close candle. And you would literally caught perfect entry all day. You get to ride it until it ends right there on top of our discount array. And you're like, I'm done. I've caught from perfect entry to near perfect exit right there. Does that make sense? So those of you who want to do some homework or need some homework to do, and stand by, my wife's going to bring me some breakfast, I think. What broke? We need that. Yeah, so that's how I want you, if you guys want to do homework, if there's anybody out there that wants to keep practicing this stuff, you need something to back test, you need something to get your mind into trading and looking for the precision type entries like this, I want you, that's your homework. If you're willing to do it, just post it on the Telegram channel there, and I'll be happy to review that with you. And anyway, we have a body break below here. We come back up, we tap it, and we keep going lower. So we've taken out these lows. You want to see if a body gets below here now, like it did here. You want to see a body get below here on a close, come back and use this candle and that inversion as support to go lower. And we're looking for original consolidation inside the overall buy model to get retapped. And right down in here is your discount inside that level. Oops. So if we continue to find support, I'm looking for here on downside for the next downside model. So let's reverse this. You could see this. If we end up running through this level, if we run back through this level, I'm looking for this. So I would do 3 levels here. I would do that level. Strangely enough, it lines up, right? So if we see a retracement back into here and then finally goes lower, you can see that level right there, that lines up. Then you go here, that level lines up right there. Then you can see this level right here. And that lines up with this little imbalance over here, this busy. And if it doesn't, if this holds right there, then that's expected downside. Then there, then there. So ideally you want to see all the way up to here. If we just see that and then continuation, you're looking for 99.72 on the downside, which is the last little run on the consolidation that starts this whole buy side. So if we can see, expect to see price to go here, then look for all bullishness in your other Forex pairs, if that makes any sense. Does that make sense? That's how I kind of reverse engineer it. So always take these price legs and start reverse engineering where you think, set your little downside objective and say, if that was my downside objective and it hit the very bottom of that, what would my upside expectation be? What would my upside expectation be? What would my upside expectation to be if it just came down and tapped that? We have confluence up here. We have something that lines up perfectly with that as a downside objective. So if we do see it climb above here, I'm looking for this level. I'm looking, and what would that be if I take my fib tool from here to here? If that was the low right there, 62% pops right into there. So 62 to 70% open trade entry reversal for continuation on the downside. Again, you don't have to buy that. It's just, I'm just playing with it. Just playing that. Don't take any of that as gospel. I just look at that as this becomes important to me, and I want to see how I can use this. If that is right there, if that's the low, how can I use this price leg as my next rundown? So anyway, that's how I kind of reverse. I always try to reverse engineer something. I try to give you the next 2 or 3 candles in advance. That's how I'm trying to build it. And I'm looking at specifically, if I saw that, I'd be going, well, I'd like to see a fair value get below there, tap that, and take this low. That's exactly what I'd be telling you on a 1-minute chart, no different on a daily chart or a weekly, monthly, whatever. And you're going to start to see the value of this for picking your bias and being pretty precise on your biases now. Because when people say to you, well, how do you know it's going to go in that direction? You go, well, I don't know. I'll use this little thing like I've got a few tibs, got a tibs and fibs, and I got a level of precision that affords me, this thing is literally recording everything I'm saying. What the hell? Wow. Select all. Delete. For some reason I must have hit the the record button. My wife is just getting that whole transcript of what I just said there. But anyway, you'll start to see a level of precision there for your trades, your bias, because a lot of you have a problem saying, I don't know, how do you know for sure what the bias is going to be that day? Now you're starting to see a level of precision on a bias. Now I'm also showing you, not only do you get a more precise bias for the day, you also get the point at which you're expecting price to make the turn on the lower time frames and the overlap, and using TIBs. So you get right down to the 1 minute. You know what minute that should be making your turn on. If they all start to overlap and you're wise enough or sharp enough to keep all that focus, you can find a level of precision right on a 55-minute candle in the 9-10 turn or the 14-hour turn. Or the 21-hour turn. So on and so forth. Anyway, where are we at here now? Let's go. So that's, anyway, I've got, this is a pivot point for me, right? It's either going to support price and go lower. So then you go down. Now it's the daily. You see how we've come back. We didn't quite tap it. Yeah, I guess we did. We pretty much tap that. So if we roll over now and start coming lower, you look for the 4-hour. Is there a 4-hour reversal here? See how this level right here did not get traded above? On a close right there. 4-hour. See how the bodies did not break it? Wicks came up inside it, right up inside this premium array. If you go from high to low, and I show you this every day, we go from low to high. What are we aiming for? I'm just taking it right to, oops, right to there. 88%. Nails the 88% inside this fair value gap, right inside the breaker that takes out that low. We continue going lower. We did not trade a body above this level. That tells me the moment we get below it on a close right here and come back inside it, tap it here, I'm looking for range extension. Range extends. And you look for this level right here to get a body trade above it. So you can go from the body to body or wick to wick in the gap. We have no bodies get above that level. They come back into the last breaker here that takes out this. Oh, it doesn't really take out that high. This is the breaker that's got the high in it, I guess. So this would be the breaker right here that takes out these lows. You trade back inside that. Small little reverse direction after taking out this old high on a 4-hour. You come back inside the order block. It's mean threshold. In other words, if you come through this level and take out the mean threshold of that candle on the downside, we're looking for further downside prices. We have this gap right here. So you traded down below it. You come back up inside the mean threshold of this candle. Now I'm looking for this to continue dropping below this level. So if it closes below 103.275 and uses this level as support to go lower, then I'm expecting to reach for down here. Okay. 1 hour. It's going to get below that gap right there. So if we just come back up to here, this consolidation, CAM model 1 entry, continue going lower. You want to see this CAM model give up, find support at that, come lower, take out this low. And I'd expect more upside on the Forex pairs. So you'd be expecting to reach for that upside objective we're looking for up there. And you guys know how to determine which one of the, if you're trading British pound versus euro, which one's the sixth sister, right? You guys all know how to figure that out. Wherever the sixth sister is, take the stronger one of the pair and trade that. Silver, still expecting silver to reach for 31.11 to 31.39. And this is all Canadian. Oof. All right. Any questions with that? Is there any specific asset you want me to look at? If you have a symbol that you want me to look at, let me know. I'll be happy to go over that with you. If not, that concludes our Sunday analysis. And I hope you get to learn something. I hope you get to see something, at least understand where my mindset is at and why I build a narrative around something and how I build a narrative around something. Whether or not it's accurate, we have yet to determine, but I have my key levels now that will make or break the narrative. I will discount all that narrative and go to a new one if these key levels that I've mentioned get broken. Then I look for those as support or resistance levels that supports the narrative that I have. Hopefully that they make sense to you. And if they don't, tune in every day. We're talking about the same kind of setups every day. So if nobody has a level they want me to look at, or a asset you want me to kind of, I'm so glad Russell got out of that. I'm so glad he nailed this level. We looked for this right here, and we said if it trades back below that level, then we're going lower. And he literally got out at 97 something. He got out right there. And then look at that. It's dropped $24. That's a huge drop. So this is when it works and he had this asset for years. He had this at 30 some odd dollars he bought it at, and made 3 times his money in as many years. And now, so glad he got out of that. Like $68. That's just barely double what he bought it at. So that's when you use the principles we're doing on a 1-minute chart, on a daily or a 4-hour chart, on an asset like United Airlines. It works on everything, man. Everything. Thank you, sir. You're so great. Thanks, Steve. You're welcome, Lambo. You're welcome anytime, my friend. Pablo, incredibly resourceful, D. Thank you. You're very, very welcome, Pablo. We did gold futures. Yes, I can look at gold again for you if you like. So like we said in here, if you see gold right here, if it comes back to that level, consolidation, CAM model 1, I want to see it run back up inside this level right here. So for a short-term trade, oh, that's a 5-minute. You want a bigger one than this, don't you? Let's go to the daily. Let's chop this up a little bit more for you. Sorry. Clearly, I trade gold a lot. Let me get rid of all my trades here. Daily. What's our... let's just take this one here. I've got lots of time. My wife's not home yet, so I don't mind sitting here chatting with you guys for a little while longer. So here's your daily chart. I call everything an inversion now. Basically, I'm just marking that area out because it's important. So from that high to that open there, I'm looking at that. I have to include the imbalance here. Otherwise, I would just include the SIBI. Now I have to include the imbalance. See how we come back inside it, run up into a premium inside this range. You gotta think, well, it never ran to the higher. No, it ran inside this range, and that's why you got to pull the fib tool to protect yourself in an internal range liquidity hunt. There's 50%. You see, there's the low's been taken. Inversion. The moment we trade above it, we come back inside it. You're in it below the discount. As soon as you hit 50%, move your stop loss to break even, plus the cost of the trade. Take half your trade off. As soon as it hits 62%, You move your stop loss now to 50%, and you take another 10% of your trade off. It hits 70%. You move your stop loss up to 62% now, and you take another percentage of your trade off, because that's where you can get an instant or optimum trade entry reversal. And then it goes boop, comes back and takes you out. You're done. That whole day is finished. You got your entry right in here off that order block there. You're just at a small drawdown. Then you ran up for the rest of the day, all the way up into 70%. You made money all through there. Zero stress trade. As soon as it starts to break that 50%, you're at a break even and you're making money inside this range. And even if you're wrong and it comes back against you, it doesn't matter. You made money that whole day, right? The whole day. So it comes back in here again. You say, well, if it comes back into that level once again, I'll take that again for a long. Comes back in there. You can take it 1, 2, 3, all the 3 levels. You hit it. You had some drawdown here for the day. And then all of a sudden it took off. You hit 50%. Bring it up to break even, 62%, move to 50, and it stays right there. Okay, so that day ends with you at 62%. You pay yourself. You still have a portion on. You say, am I just trading up into this imbalance? And as soon as that imbalance is hit, I'm out. I'm done for the day. Or am I running for the relative equal highs above us? And this order block's low and its mean threshold. Comes back in the next day, comes back in, doesn't hit your 50%. So you're still in this trade. It gets 70%. So you pay yourself, move your stop loss down to 62, hit 70%, comes back to 75%, stay here at 70. It's 78%, takes out the highs. You pay yourself right there. Another 10%, you move yourself to 75. The next day it comes down, still does not hit you. Watch, still does not hit you. There's 75% right there at 29.41. What's the low of this candle? Low is 29.42. So you're one handle or one whole handle lower than that. So that's like lots of room. And then continues to go higher. Then it hits 80%. You move to 79. And then as soon as it takes the high, you finish paying yourself, unless you want to just keep running higher. So you see how that fib tool save your ass. You bought in here, and it never took you out. Unless it's at one point during the day, it wicked back there and took you out before it went higher. I don't know. But that's something to do. And that's a daily candle, you guys. You're in that for days. If you've got the discipline and the fortitude to stay out of the 1 minute charts and not worry about that because you're trading on a daily chart. Sorry, that's gold. I didn't really answer your question, did I? Okay, so let's go to the 4 hour. 4 hour. This is how you this is how I grade. I'm grading this one now because when you look at this, you're seeing a grading of this trade. I have to be prepared. Even though I want this to come down, I have to look at this as, is this another price leg? Are you just mucking with me here? I got to prepare myself for multiple different ideas. So I grade this response. So remember we were talking about A trades, B trades, A plus trade, a B, C, and then you grade it all the way down to a D, and then it fails, right? I'll give you all the levels that I'm looking for. So if you want this to be your A plus trade, we want to see this, do this. Hit it and go. To start breaking up above this level right here, find support at that, eat through the mean threshold of this candle, and then start pushing higher. That will give me my next price leg higher. I would take the low to the high from wherever that low is right there, and I would do a fib extension, or you could do this fib extension like this. You pull the fib extension from here to here. You got to get above it first though, but that would be the bullish. And I'd go 1, 2 handles, and I'd put my stop loss up here, and I'd be aiming for up here. Again, this isn't carved in stone because we don't have the retracement finished yet. So that may not even be part of it. But let's say that stop there went above that, I would be pulling my fib extension to 2, 2.5, 3, and so on and so forth, and I'd start aiming for higher prices here. But if you look at this level here, so anyway, I'm going to get rid of that there. So there's your A plus trade. If it leaves from here, comes back, finds confluence or support on that on a 4-hour chart, you're looking for higher prices. Pull your fib tool, do your extension, 1 standard deviation, 2 standard deviations, and pay yourself accordingly. The next trade would be a B trade. A B plus trade would be right here, which is the 50% of this range. And right here, that would be like a B trade. And you want to see it freeze off of that wick off of there, and you want to see it snap off of that and start to go higher. That would be mean threshold or consequent encroachment of the BISI. And the last one is the C trade right there. So A plus is just like literally come down, tap it, and leave. A trade would be right back into institutional order flow entry drill. B trade would be consequent encroachment of this trade. C trade would be the absolute like 75% of this. So if you take the BISI and you put it into quarters, that's it. 75%, a body must stay here, and a wick should not fill that in. A D trade would be a fill of that and then leave from there. Okay, so it loses its luster for me if we start to come in and fill that whole BISI up here. You want to see a portion of that stay open and start marching higher. If it does close it in, or even you see even so much as see a wick coming through there, it's a fail for me. Or if a wick gets through there, then it starts to fail for me. I wait then for a market structure shift to confirm higher. That's how I grade those that level. Once you broke out above a high like that, you want to see that beautiful little give me some leg here, because then your next price leg from here to here would be from there. You can expect to see that kind of run up there. Let's pull our fib tool. This is how you just keep reverse engineering for confluence, right? Let's do this. Bullish. 1, 2, 2.5. So that puts us way up into what, 1.5 standard deviations above that level if we reach that point. Watch when I go to the A level, or if I just pull it right from here, we're right up near it. 2 standard deviations is actually 1 whole price leg further yet. Now, if you want to argue the whole price leg is this leg, from here to here. Oops, Let me get rid of that one. And we say, this is our level. Then we look for 2 standard deviations. That puts us just above 2 standard deviations. And then, so that we should see a wick up there and a body end on 2 standard deviations and see if we get a run back down. So you're looking at $3,100 for gold, if that's the case. If we lose, again, if we lose the grading of this and we drop below that level, now that turns into a potential inversion where we use this level as an inversion to come back down deeper into the range. And I look for this box down here. That's the 2 narratives I would build for gold going higher and for it to go to lower. Does that make sense to you, Kamal? We did gold. Do you see NQ going the opposite way of Dixie? Do I see NQ going the opposite way of Dixie? Well, I see right now, I want to see this level right here. We were talking about this morning. If we see this level get broken to the upside, then I'm going to see this go higher. And what do we say about Dixie? Where is Dixie? What do we say about Dixie? What do you say about Dixie? What do you say about Dixie? We said, if we can get back above this level right here, then we're going higher. So if right now we've got just support off this level, I expect to see this keep coming lower. So if it goes in the opposite direction, if this continues to go lower, then, and NASDAQ, I want to see NASDAQ pop up above here to go higher. If NASDAQ rolls over and goes lower, then I expect to see Dixie. I don't do that whole, these guys have to work in confluence with one another. I just look at one and I just study pure technical on one level. I don't care what's going on all those other levels. I don't care about S&T divergence and convergences and stuff like that. That's a tool that some people use and they use it very effectively. Me, I find no use for it whatsoever because I'm in the trees. I'm in the leaf, as my buddy would say. I'm on the bark on the tree inside the forest. I'm picking at the bark. I don't look at all that other stuff. It does not alter my trading of an NQ at all because that's where I'm spending my majority of my time. So if you're looking for a confluence of Dixie moving and NQ moving at the same time, my question to you is, does it alter how precise you can be on your entry? Because when it boils down to it, you're still looking for this inversion on whatever time frame, whether you're Dixie or an NQ or whether they're working in harmony with one another or not. You're still looking for that perfect entry. And if one gives you confluence that you're going to go higher, I'll tell you that they're going to get in sync with one another. If you're expecting this to go higher, I'm expecting this to go, and you want them both to go in the same direction, then I'd say as soon as that one breaks that high and that other one breaks that high, then yeah, they're both going to go in the same direction. If this one breaks that high and that one doesn't, then this one's going higher and the other one's not. They're 2 separate analysis. I never add the 2 together and say these 2 have to work in harmony for me to be convinced, because I'll tell you where this will turn. If I'm wrong, I'll be inside this range and you can pay yourself on the way up. And then when it turns and goes back the other way and they get in sync with one another, you go, I knew they weren't going to work. Yeah, I could have told you that right down here on the lower time frame that it wasn't going to work. So you'll find that it doesn't work when you dig down and start staying in on the horse. You hear me say that every morning. You stay on the horse. All that other stuff is noise. It's all, and I'm not saying that what Michael showed you was wrong. It's a lot of stuff to take into effect. And trust me, you can find the reversal happening all the way down to that 1 minute when it starts to unspool and go back the other way. You can see it really quick and early. You see it early. And then you can get that confluence on the higher time frame stuff. I don't know if that helps you or not. Who was it who said that? Scott. Yeah, Scott. My question is, what is it specifically you're looking for Dixie and NQ to do? Do you want them working in harmony to confirm that you're going to go higher? Or are you looking for details for confirmation to go higher? Because I'm giving you the detail of when it's going higher, and you look for the same thing over there on Dixie, and you find it on Dixie, then that makes you come over here and say, yeah, now I'm really sure that that's going to go that direction. If that's what gives you your proof, then look for your confluence. Thanks for the session. Thank you, Darren, for doing this great insight. You're very welcome, Joe. Come on, if Dixie goes up, then gold drop a bit. Well, yes. If Dixie goes up, gold tends to go down, and vice versa. If you're looking at those from a opposite effect. But look at this, and if this tells you absolutely what's going on in the Dixie, then and you want to support that, I want to see that level right there, find support, and either go higher, which is push Dixie lower, or if this goes lower, then you expect to see Dixie go higher. So if we run through that level right there and close below it, come back inside this consolidation and find support of that and continue going lower, we'd expect to see Dixie go higher. Where's my Dixie? I expect to see my Dixie go above this level and start pushing higher. Are they on the same time frame? Sorry, was it the same time frame? Not even close. This is a 5-minute chart. I think those are both daily, are they not? Yeah, they're both daily. Cheapers. Oh, my trades here. So tell me what you see in here that gives you something that looks the same as this. Yes, it's gone lower. Yes, it's gone higher. 3 days of going higher. And Dixie. Sorry, Dixie. 1, 2, 3 days. Did it go higher? No. So do they work perfectly in tandem with one another? No. Like a complete opposite? That's like 3 bold days of going straight up. Right? And then you go to Dixie over here. 1, 2, 3 days of doing nothing. That's going up, and then going down. So they don't always go in perfect harmony. That's why just stick with the pure technical analysis, man, of each asset. If you start to combine assets, and I'm not doing this until these two are in conjunction with one another, and if they're all in harmony with one another, then I'm happy. If that's your thing, do it. It just seems like a lot of noise for me to not give me any precision on changing my entry at all. And I can see on the lower time frames when it turns. So that whole SMT thing doesn't mean anything to me. And I'm not discounting. Please don't think I'm discounting or it's ego or anything like that. I really don't understand it. It's just too much for me to bring in to confirm. I just go, okay, yeah. So if NQ is going down and ES is going down, then ES is the one that dictates whether or not NQ likes to move. If ES is going down, NQ should follow, right? And Dow should follow as well. But if the ES is going up and Dow is going down, then they're out of sync with one another. So I'm expecting Dow to make or NQ to make a retracement. I'll see that retracement on the 1 hour or the 15-minute. I'll go, yeah, it's retracing. You go, good, I knew that based on the SMT divergence. Didn't give you any precision in terms of your entry. You'll still have to come down into the NQ on the 1 hour to see the reversal anyway. So it's just like it gives you a little bit more foreshadowing of what could happen, but it's not I've seen SMT, people go, oh, it's SMT, and then it fails. And you go, oh, How did you know it was going to fail? Well, I saw it failing right here at the 1 hour. Gave you the reverse. It's coming back inside the direction and inside that small range. So when you use SMT, if you can use this to help you zoom in on your SMT, great. If it helps you improve it, I'm happy for you. I can never use it. I find it's frustrating. If Dixie goes, who needs SMT when you have TIBs? I don't know if we go that far, but looking for inverse correlations as entry confirmation. But you're right. It's one more thing to slow down your decision making. And it's good. I don't mind it slowing your decision if it gives you a more precise entry. If it just brings in more doubt, and then you go back on that 1 minute, that 1 hour time frame, or the 15-minute time frame, and you see that reversal happening, and you go, "Oh, I didn't get the confluence." The SMT showed me that that wasn't going to happen, or it didn't give me a reason to get in because they weren't all in sync with one another. But the 15 minutes said clearly it's going. It broke the low. It gave you a sell side liquidity. It broke market structure, came back and said, "Take me, I'm going. Doesn't matter about SMT. Take me now. I'm going to go to the moon, or I'm going to the gutters. Come on for the ride," right? And if you miss it because the SMT kind of kept you out of your decision making, but it was clearly showed you on a 15-minute chart, it was heading there. Like, look at that blue line right there. I don't know. Let's just try this. I'm yakking about this. Let's do this on a NQ, ES, and I think that was over here. Let's get a separate chart. If you guys got a few more minutes, stick around. Let's try this. I'm going to try to put this to bed once and for all here. I want to try and let's take SMT. I want to be a pro SMT guy. I'm going to support all you guys who like SMT. I don't want to be the antagonist. I want to be the protagonist. I want to be the guy that supports you guys. So let's try and find support of an SMT. So here's NQ. This one, we'll put this as ES. ES futures. This is NQ futures. I'm just going to do the futures. We're going to look for SMT divergence, okay? And we're doing this as Dow. Let's see if we can't look for a divergence. You guys help me out with this because I don't study divergences at all. So let's put this on daily. Let's get rid of all the crap in there. Remove the drawings. Let's get in here. Let's remove the drawings on here. And let's remove all the drawings on there. Okay. So we got nice clean charts now. And then we're going to zoom in on this and we're going to do the SMT divergence. And we're going to try and find how to use SMT with the little tools that we've just done. So those of you who actually use it, let's see if we can't find a more precise way for you guys to, let's get all that lot off. Remove the indicators. Remove the indicators. And remove the indicators. There. Clean charts. Daily, daily, daily. NASDAQ, S&P, and Dow. We're all happy with that right now, right? Inverse correlation. So, tell me where the first divergence pattern occurs. Okay, let's go to, we have this one here. Higher high. Right? What the heck? Slightly higher high. And this is, would this be considered your divergence? So that's the high right there to right there down to that day there. So I'm going from this day right here and this day. So this candle, that high to that high, and that puts us, this one's a little slightly lower, makes a slightly higher high, and then goes down. So this one's going down while these two are going up on that day. That's what you consider an SMT divergence, correct? Am I correct in that assumption? Just give me a quick thumbs up, yes or no? Yes, no one, anyone? Yes. I gather the waving hand means yes. So we have a divergence here. So we're looking for this day right here. When you start to notice that this day you're in a divergence already. So you probably noticed, well, we'll assume it's here. I don't even know how you'd notice this is a divergence until that high has been met. Because this one, if I just go to here, yeah, that's like way down there. It's all in one candle. Sorry. Those are going down, going down. This is still marching up higher. That's why this thing just confuses the shit out of me, because I don't know how the hell you'd even... Which one do you take it off of? Like, where do you confirm that your SMT means something now? Because they're all different. Each day is like almost a different thing. It just seems... Yes, okay, so I'm going to stick with the original one there. Let's do this one. Because you guys have been waiting all this time for this so-called SMT to happen, right? Right there. And we want this one to go right here. And we want this one to go right there. So we're definitely in a divergence type of situation here, right? This one's going higher, this one's going lower. All right, now you guys tell me which, if you saw this, which one do you go to? Which markets do I go to? Let's try and find a reason. So now you suddenly decide here on the because these charts are doing this right now. We don't know what's coming. You have to assume all of this. Okay, that's what we're assuming right now. You guys tell me, which one am I going for? We've got a divergence. You guys, okay, great. Now, so what's your decision? Is it based on an ES? Is it based on Dow, or is it based on NQ? Dow's the weaker one of the three. So do we base it on a Dow? Do we go for Dow first? NQ is accumulating orders. So ES is accumulating orders as well, and Dow Jones is failing to go higher. Okay? YM is the weaker of them. So you short the weaker one. Okay? So that's what we're going to say. That's how we do this whole SMT thing, right, Stephen? Catalyst first. I'd look for lows. So you'd look for the lows here, or let's use the principles that I try to show you every morning. So we have a consolidation right here that's starting to happen. I see lows forming. So now I see these guys they're still accumulating more longs, or yeah, they're still buying more longs, and these guys are going short already. So I'll go, great. This little box, so this is how I would trade SMT divergence here, using the little techniques that we've got set up so far. This is how I think I would trade this. I'd say this is a consolidation. If I continue to trade below this and use this as a CAM model on a daily chart, I'd be aiming for this box down here, my discount box. This is the box-to-box trading. This is the boxing I show you guys every day. I'm aiming for this level here. So for me, that's 2,000 handles away. I'd be aiming for that. If I break this low and trade back into this, I'd be looking to go lower from there. Okay, so that's a CAM Model 1 entry for that low. I have a premium and a discount box. So I would take my fib tool, I'd draw it from low to high, and I'd say, I need to get a premium. I need to buy a premium and short it, or short a premium. Okay. Oh, sorry, equilibrium. I don't want equilibrium. I want retracement. So I need to be in a trade in a premium, so above 50%, and I need to use my fib tool on the way down. And again, you guys decide what method you want to use to manage this. I'm going to use a simple little fib tool and a box-to-box trade. Okay, so in other words, consolidation to a discount box. That's where I'm heading for. That's my divergence. So I ignore those ones now, and I'm going into this level right here. That's my full chart. Okay, now I say I'm looking for a low to take this low out here. And I'm looking for, there's a little imbalance sitting right in here. So we've traded back up into it and we've got lower. So I have to base everything on each candle after this. So let's base it on each candle afterwards. Okay, woohoo. Now come on down here. Give me that break in market structure from the downside, support off this consolidation here. And I'm going to take that sucker for a run down into here. Okay. Boom. We have a break in market structure. But I have to be above this 50% in this level here for me to get aiming for down here. If it runs straight for me, I didn't get a chance to catch it. If you're looking at the reversal, here's that. That doesn't really give me a reversal. No, it doesn't. It's just an immediate rebalance. See this little guy right here? If I can get below that and then trade back into that, I'd like that for a short. But I'll take that. I'll take a low right off the consolidation here and all the way up to 50%, which would put me right in there for a CAM 2 model. All right, let's see what happens. Okay, did it come back and give us a kiss? Nope. It came back right into this level right here. So I don't want to, I want a premium. So I'm not going to settle for anything, but you always wait for price to come to you. So let's go here, right there. We had another one right there. So it just came back into that. So we traded below it. You come back inside that guy. I want that level there. If I don't get it, I don't get it. No big deal. But that's what I'll be looking for. Oh, did it give us a little kissy? It tapped it right there. It's a problem when you're want to do one candle at a time. So there, finally ran back up into it right there. See, it tapped it right there. Wait for this commercial to end. Commercial's over. So it's also right into that low right there. That's the low I want. So I'm going to put this guy right on the bottom of that low just to see if it tapped it. Okay. And it tapped it right there. Now I want to get short, right? So I've got my short. Now I want to see this stay open and us continue looking for our discount array here. So you look for, where's my, oh, sorry, over here. Definitely in it now. You're definitely in your CAM model. It filled that. And there's your discount box right there. So it took us, if we're in here, it traded back against us and then popped up above us. You have to be committed to whether or not, did it a body trade above there? It did not trade above there on a body close. So we're still going lower and there hits the discount box. So now you've gone from there to there. That took us right off the top of that low is 43,951 for our entry. We were underwater 43,951 for whatever the high is here. 43,951. So it would have been 100, just under 100 handles of, don't forget that's a daily. So just under, it was like 80 handles, 70 some odd handles up. That's all we had to draw down 70 handles. And then all of a sudden it ran down to our level right here, which is 42.58. So it would have been 1,400 handles in 3 days. Right? And now we say to ourselves, does it trade below this on a close, come back, find support at it, and extend the range? So we wait. We see what happens. It retraces off of it. No body breaks it yet. So it comes back in. I'm looking at this wick and that body right there, and then the mean threshold of that candle. That order block should hold price. If it doesn't, then I'm looking for a run back up into this range again. Right? Next candle. This is how I practice on the weekends. It comes back into this candle's wick. We start to come back through the body again. We'll just wait for it to close below here. We want to see if this range extends now. Wick, still no body. Ah, now we have a full body and it extended the range. So what do we anticipate? We look for, now the body's got through there, this candle's body has been broken. I want to see wick, close, mean threshold, that. I don't want to see any higher than that. I want to see this candle take price lower. And then I'd be aiming for down here at 47.56. Literally came back. Look at that. Right there. You'll see it right when I'll put this thing on here, because right now you can't see it because we're going one candle at a time. Right there on the bottom, we called that first, and then we said that level, then the mean threshold and that thing, right? Look where we hit. Right there. Right on it. You spent all day going down because you nailed that sucker right there. The drawdown was probably a couple of handles. And we're aiming for our next discount box, which is over here. I tell you, this shit works, man. All the way down into here. And then you go, burk, burk, burk. Look at it. Ding. You hit it right there. Discount box dusted. You got 3 days of 1, 2, 3 days of nice runs all the way down. After you hit that level, perfect level of hit right there. 1, 2, 3 days, tap it, you're out. That's using SMT, you guys. SMT is an amazing thing. See, just using the principles that we went through. Now, did I need to see SMT for me to make that decision right here? No, I did not need SMT for that. SMT gave me the option to say, this is the weaker of the three. This would be a great time to look for one of those setups, right? SMT just gave you an idea on a daily to find the most likely run. So you can just say it's like, of the three pairs, where am I going to go hunting today? Which field will I go do my hunting in with my camera, of course? Which field would I enter it? And when you see this divergence, it says, hey, look, this is the best field for a short right now. Look in there. Okay, come over to this one. That's where you can use SMT to your advantage. I just think I just talked myself into that one. Why SMT works. All right? But don't forget, you still have to know, back on the old higher time frame again, you got to wait for this. You don't know if that's SMT yet. You don't know if that's SMT yet. It's not till we saw this in the structure, you go, okay, well, this wasn't SMT from there. Oh yeah, it was. From there to there. Do you pick it? There's nothing to enter in here yet. Here to here, that's going down. That's going down. This one here is going up. So now do you pick more up? Because these two right here, from there to there. This is why I don't like SMT, because you don't know where to pick the best spot. From there to, let's just pick the next candle, there to there. Now I want to go pick the same candles. There, oops, there to there. This one's going up, these two are going down. So you're saying, if we use the logic the same, we say SMT, this one's the most stronger. These guys are the weaker ones. Are these guys just running for liquidity now? We're just running for liquidity and they're going to go lower because these guys are going to drag them down. These guys dictate what this guy does. This guy just ran for his liquidity and now he's trying to go lower. Or do we say, hey, look, he's going higher. He's the stronger out of the three. I'm going to jump in there and I'm going to go long. And then you just got taken. How do you guys treat that as your SMT? Is it just a run on liquidity? Because those other two are the stronger ones that dictate where Dow goes? Is that how you do it? Pretty good return. Yeah, oh yeah, that's a major return. That's just the daily. Imagine when we're doing that on a 1 minute chart or a 1 hour chart. I'm just showing it to you on a daily. You can trade this thing exactly the same way on a daily chart as we do on a 1 minute chart. So where do you guys make your decision on what's a divergence? That's a divergence. These are two are down, that one's up. Do you now switch, do you now add a new rule and say, it's not just the weaker one, it is which one of these guys is the leader? And if this guy is running against what the leaders are saying to do, we're going to go lower, right? Or these guys are weaker, that guy's stronger. We're going to go lower. And they go low for a second and then they go higher. This guy goes lower for a second. And that day they all went low. They went higher. And then this guy rolled over and went down. And these two kept going higher. And they did not take out. Oh yeah, that guy did. Yeah, they took liquidity. They got the reverse up here. They got a reverse right here. They got a reverse right here. They got a market structure break, reverse market structure break. So to me, this is way too confusing for me, because now I have to start adding rules to who's the weaker one out of the two, who's the stronger one, who's the leader, who's not the leader. Screw that noise. I can find my reversal right here, my structure break right here, drops below my structure break, trades back into it. I'm short on ES, structure break here, trades below it right there. You come back, you just kiss it right here, go lower, look for a structure break down here if you want, trades back into it, going lower, structure break here, trades back into it, go lower. It doesn't matter. All that stuff at the top there. But if we use what you guys just gave me as that was the weaker one, and that's your trade, that's how I would trade it if I was using SMT as my means to trade. But the principles of getting in are exactly the same. You see that? I did not change anything around just because it was an SMT. It just made me zero in on the field I was going to do the hunting in. But the hunting is still the same. I jump on the horse and it's bucking and throwing me around, but I'm staying on it all the time. It's following my rules. I'm staying on it. Now, whether or not I do that in that one, or that one, I don't care. And if SMT gets you there and gives you that as the most likely opportunity to catch your trade, I hope it works for you guys. You need the lower time frames to trade below the breaker to confirm. Well, you got to be careful on that one, because right here, if this is the breaker that takes out this high right here, and we have a lower time frame, like for example, this wick closed below there at some point in that day, if there was an hour where it closed below that, you'd take that as a short, and then it would trade all the way back against you. If you didn't stay on the horse on the hourly and say, no, that it did close below there, but all of a sudden it reversed on me and went back up. I've got to be prepared to say, just because that breaker, it got closed below on an hourly basis and then switched up on me at 9 o'clock in the morning and went into lunch hour late in the afternoon, ran all the way back up, London high, and then went all the way back down the next day. You still have to use, if that's your breaker on the daily, you have to use the breaker on the daily to be at traded below, and then look on your hourly to confirm the daily is now traded below it. As soon as we trade back into it, I'm going to get short right inside that candle's high. And I'm looking for an hourly reversal off of the daily confirmation, not the other way around, because you can get beat up in that. Does that make sense, Stephen? Unless I read misunderstood your statement. That was fun. Thanks for sticking around. Let me work through that with you guys. It still emphasizes my principle of no matter where you're using your SMT, be careful, because you have to know which levels you're going to pull your SMT off of. It's easy to do after the fact, but you still have to look for your setup. Once you zeroed in on the field, look for your setup. And the setup is what we focus on every morning, reading price action. Excellent. Imam, how you doing? You missed a really good day, man. If you just turned up, you missed an awesome morning. I think this has been a lot of fun. It's nice to kind of bash out some ideas with you guys. Thanks for letting me vent my ideas at you here. That was a lot of fun. I'm going to remove all this other chop in here right now. All these lower time frame ones, I get rid of them. Use them all later if you need to, but otherwise, keep your charts pretty clean. As we broke it down today, in that monthly, weekly, and daily narrative, have that on a separate screen. If you've got a separate screen, put it over here so you can see it as a reference point with those 3 levels on it, the monthly, weekly, daily. And then have another chart that has daily, 4-hour, 1-hour levels. And then you can start to go into your, and have on a separate screen, and then just look at your 15-minute, 5-minute, and 1 minute on a separate chart. So you can say, that one's lining up. And you can you can go over here easily and put an alarm in here. Put an alarm right there. That tells you, and then just take that alarm and move it down. I don't know if you can move it up and down. You can't. Maybe you can. No, you can't move it. That's a shame. But anyway, you can find, if that's your key level, put an alarm in there so that when it comes up there in another chart, it hits it. And it goes bing, bing. You go, oh yeah, I'm supposed to look somewhere. Oh yeah, it's at that level that we're looking for. Perfect. Now you can start zeroing in on it on the lower time frame charts and start nailing your entries and start getting your entries a lot cleaner. And that it takes some of that noise. There's so much noise. I hear you guys talking about so much ICT material, and he's giving you an absolute plethora of information, like just nuggets all the time. He's giving you nuggets. But you simplify it like this, and then just keep working that. And I'll just start bringing in your higher time frames with the same principle. Make your trade strategy fractal, if that makes sense. Make it fractal. So instead of trying to bring in something you don't use on every time frame, get rid of it. Okay, and I say that with love in my heart, because I don't want you to change your style. I just want you to try and cut some of that noise out, because with the noise is stress. With all the noise, it's stress. If you simplify it and make your trade as simple as possible, that one setup as simple as possible, and that's all you look for. That's your bread and butter setup. You hear Michael say bread and butter stuff all the time. You're not asking for the whole damn loaf. You're not asking for the baker, the ingredients, where he bakes it, how much, what's the temperature of his oven. You just want the damn slice of bread and the butter. That's all I care about. When it comes, I'm buttering my bread. I'm eating it. Simple, simple, simple. You don't worry about, oh, what went in to make it. Who cares? Noise, noise, noise. The bread's delivered. You butter it and you eat it. Is it a 6 a.m. or 6 p.m. candle that you use for the important level? 6 a.m. Eastern time. 6 a.m. Eastern time. I'll put my levels. These are the levels that I put down. Mark these on your chart. Mark them on your chart. Mark on your chart. These are the levels I look for. And this is Michael's stuff. So this isn't me, this is him. I look for, the first one I look for is this one. Start at, right here. You take this little button and you find your 12 o'clock candle. That's 00 New York time, which is right here, right there. And I put that and I say, make a template, and you call it midnight open. That's the midnight open candle. And it says midnight open. Put it on there, your template, save it as a template, and put it on here as far east, the far right of your chart. So no matter where you go, it always sits right there. So you know when you come up into it, that's the midnight open candle. And if you want to keep the midnight open candle on all week, you put midnight open Monday, midnight open Tuesday, midnight open Wednesday, and you can put that on there as well. So it's not all the midnight candles overlapping. You don't know which one's which. So that's your midnight open. Then I go and do the Michael's box, and I take the midnight open candle and I look for the high and the low between midnight and 30 minutes, which is right here. That is the highest point and the lowest point, or the open range, first half hour, open range of midnight. And then you go midnight open range extension. And that sticks it right out to the end of the month, or end of the whenever I finally take that thing off of there, it's in there for the rest of the day. Okay. Then you find the first fair value gap, significant fair value gap of that range. So then you go right there to there. And then you go, whatever date I'm on, I will call it midnight. So Monday or Tuesday. And in this case, it's a Friday. So I will go Friday. Right, where's Friday? Right there, Friday. That gives me the first major fair value gap on Friday. So you can take that one, that level right there. So now I've got 3 levels in there. And now the next one I'm looking for is the 4 a.m. candle. 4 a.m. open right here. Bang, and I call it the 4 a.m. open. 4 a.m. candle, and I put it to the right and I mark it in there so that I know what I'm looking for. Then I go over here and I go, where's the 6 a.m. candle? And there's 12 of you in here that are actually seeing this, and anybody else who's watching this after the fact, if you're this far in the video, congratulations. This is a level Michael talked about ages ago and has not really emphasized it much lately. He talked about it ages ago. ABS, you can thank ABS for bringing this back so that you are all aware of it. It is an ICT term, but ABS has been in on this thing for years, and ICT has never mentioned it much since then. So then you take the 6 a.m. candle, because you watch how important it is. 6 a.m. From 6 a.m., which is right here. there to there. And I go 6 a.m. Look at the overlap already. Midnight open range, midnight candle, and that midnight open fair value gap. Look at how they're overlapping already. We have 3 of them overlapping. So is that a confluence? Interesting set of data points. Let's see. Then the next one I'm interested in is 2 more levels. I'm interested in the 830, which Michael has talked about before. We have affectionately called it Hadi's 830 candle. 830 right there. So I affectionately call this Hadi's 830. That's H830. Now I've got my key levels. I wait for 930 open and the first fair value gap that forms after 930. And that is this little fella right here. Or that one. That's an imbalance, so that's the first one I would treat. Okay. So that's all the levels on my chart. So now let's look at how, when you pull this chart out in time, you'll see how these levels from where we first pulled them, open range, consequent encroachment, right inside it. Look at how many times we worked the inside and the consequent encroachment. We just literally sat on it, bottom, sat on it, went through, came back into it, ran down to our discount box down in here, created a reversal, traded back inside it, ran through it again, take out the highs, got a reversal, trade back inside the reversal, go back down to a discount box, consolidation, CAM model 1 entry here, run back up above this level, and see how we're finding some support at this open, that first fair value gap and that first significant fair value gap of the midnight open range. Look at how it's just banging around inside that thing. Comes all the way back inside it again, and the consequent encroachment of the midnight open range, and then launched way high. Come back into, body hits the open again. Look at the open here. That midnight open, it nailed it again and then left. Look at that. That's the 830 candle. Ran down, went all the way through it, came back. Look at the support at that level. Hadi gets in on these. So as soon as it runs through, if it comes back and taps it, he's going long. He catches that long and he's in that sucker for a nice little long until you see a reversal. And that reversal right there, you get out of that trade. So you caught from here to here. As soon as it trades below it, you get your reversal. You're on the wrong side of it now. It runs through you, comes back through one more time, hits that level, all the way from here to here, trades through it, and look where it comes. You remember, I've told you this today. I've given you so much information, it's probably going to get confusing. But you see how you get through that level and you never get an opportunity to come back and grab it? But what does it do later? It comes all the way down to the discount box, then comes all the way back up. Actually, it runs all the way through all that stuff. Comes all the way back up to that one level it didn't give you an opportunity to get into before. Remember here, it didn't give you an opportunity to get short. It comes all the way back up there. Now it says, well, you got your opportunity. You come all the way back down to a discount little box down here. It's beautiful. I tell you, if you miss this opportunity later on, it'll give it to you. Through the 8 o'clock or the 8:30 open, look at this. Right through the 8:30, right into it again, and then run lower, all the way down to the discount box, which is your midnight open range. Run through, wick, 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 wick. Body runs through it, comes back, gives it a little kiss. Off to the races you go again, right off of Hadi's 8:30, which is Michael's 8:30. He's talked about 8:30 candles many times in the past, but nobody takes note of him, but Hadi did, so we give him the credit. There's lots of stuff that people don't use on Michael's stuff that we're starting to incorporate into our charts regularly now. And you use that on our reversal patterns and box to box trading. You guys got yourself some smashing levels of detail. Smashing levels of detail. Look at that 6 a.m. candle again. Look how many times you hit the 6 a.m. candle. Look how many times it gets nailed. Inside it, up to it, through it, onto it again, onto it again, onto it again. And that just happens to overlap inside the midnight open and the midnight open fair value gap, midnight open, and the midnight open range, and the 6 a.m. candle. Talk about an area of sensitivity when you have multiple confluences on a support level. They're not usually that close, but when they are, look at how freaking bomber they are. Like, they're key levels, man. Strange how trading seems to be so uncommon. It's too fascinating. Yes. Thank you so much. I think these levels will help me so much. Appreciate it. My pleasure. My pleasure. Remember, that's just a lot of people that have put a lot of hours into focusing on these key levels, and they've been kind enough to bring it to our attention. And we utilize those levels along with what I'm showing you here, and use TIBS on that as well. Ooh, let's use a little TIBS love on this, right? 30.32. Look at that. 32 makes the high. Let's look at all the times we tap these levels now. Look at this right here. 30.32, tapping that level. It's a TIBS level, by the way. Look at this level right here. 40, 42. Those are TIBS levels. We get a new high. That's a 50.55. 55 right here is a reversal. And we tap this TIBS level right here. There's a 5. There's a 7. 6, 7 reversal. Look at this level right here. 24, 25. This one's 31, 32. There's a TIBS turn. Then they got, this is all Crazy Ivan looking around inside here. This one comes back, gives one more tap. That's 38. There's 43, 42, 43. 42 finishes the range. 43 continues to go higher. Where's another TIBS? Let's look over here for a TIBS. Touches this level right here. There's 27. That's a TIBS level. There's your 32. Breaks the low. Continue going lower. 55. A TIBS level. 21. TIBS level. Are you starting to see it? Are you starting to see it? There's a 12. There's off the 4 a.m. candle. 9, 10 turn. 12 turn right off the top of the 4 a.m. candle. 12 minute. And go higher. Do you see it? TIBS. TIBS. My pride and joy. My signature dish, as it were. Any questions with this? This has been a really good Sunday. I've really loved this. We've given you guys some real good nuggets. This is one of those ones you want to click, save to favorites, because there's some awesome information in here for you guys. Awesome information. Anything else you want me to look at? My wife's not home yet. Just missed the TIBS, but I'll rewatch it. Oh, Dale, watch it. Watch it, my friend. I just gave you some bombers. I gave you some great information here. save it, go back to it. Just Mr. Tibbs, do you have classes every Sunday? These aren't classes. They're just me bashing ideas around. If my wife is gone on Sundays, I'll definitely do these sessions with you guys if you want, if people are interested. I'll post it on the Telegram channel there. And we can get together on Sundays and start going through narratives and come through some ideas. But no, I don't do it every Sunday. This is just a treat because my wife's gone and having lunch with her friend today. So we got to encourage my wife to go for lunch. Measured move off the fair value gap. 25, 50, 75. Measured moves off the fair value gap. Which one are you talking about there, Steve? Which fair value gap are you mentioning, by the way? A measured move off the first fair value gap. Like, I know he does one of these things too. He'll go like this, and he'll go, and then he'll pull his fib projections like this. Oops. Come on. I don't know why it keeps jumping around on me. Bearish. I get the wrong one here. Bullish. There you go. So, 2 standard deviations. Look at that. Right there's 2 standard deviations right to that spot right here. Nice, perfect hit. 4 standard deviations right to the money. Now, when he showed this, and he showed sometimes you'll see a 1 standard deviation, then or 2. In this case, it ends up being 4 after it comes back down into it. I don't use this as a projection point because yes, it makes sense when he says it, but you don't know it's going to get there. So unless you use, if you're going to use this, you use stay on the horse until it switches up on you right here. Then you say it isn't going to reach for 4 standard deviations because it's just dropped below that low. It's come back into it. I'm back inside this range here now. I'm looking for 50% of this range. So I pull my fib tool from here to here and I look for 50% of this range. It trades back up inside that premium level, goes lower inside the discount area right here, back to this order block or consolidation. And then we look for reversal. Body trades above it, comes back inside it here, runs through the premium array with a close. You come back into it, that premium array, for range extension. It runs all the way back up, extends the range. We have a reversal, trades below it, comes back inside it. Now you say, if I get back through this level on a close, I'm looking for this ranged extension. And it does. It literally comes up, just pops over it, reverses, trades back through this level on a close, and extends the range. Now you look at this level right here and you say, if we trade back through that level on a close, I'm on the wrong side of this going lower. So it does, it closes above it, comes back, finds support at it, and then we start getting our 4 standard deviations above that level there. That's how I stay on the horse. And if that's, you're aiming for those, if that's your projection and you say 2 standard deviations, 4 standard deviations, what I'm expecting, or every standard deviation I pay myself at, whatever your strategy is, there's many different ways you can manage that, I suppose. So a graded response, 50 to 25%. So you can either go 25, a 0.25, a half, 1 standard deviation, 2, 3, all the way up to 4 and more. Because look what that ended up being. That ended up taking off like a rocket, right? Once you get past 4 standard deviations, it just becomes like, okay, it's a moot point now, right? Now I just literally try to stay on the horse and look at the time. 9-10 turn. Look at the 9-10 turn. 9, 10 sets the low. Another 10 o'clock, makes another swing to go up into 12 o'clock reversal, into 12:30. Crazy Ivan, he sees you, he's gunning for you. Crazy Ivan. Then you got the reversal around 1 o'clock, right? There's your reversal. Look for that 1 o'clock candle to form that BISI. Trade back into it right there. Bodies respect it. Mean threshold is held. And you get all choppy, chop, but it still comes back inside that range to our discount box. Box to box trading. Have a nice day. Anyway, here, same shot. I show you that stuff every morning. D dropping the nugget train today. Yeah, it's a gold train of nuggets today, boy. I gave you guys a lot of cool stuff. You have to watch this a couple of times over to get the all the information I give. I don't want to just swarm you guys with tons of information though. Otherwise you end up going, I have to take on everything that Mike was saying and now all this little new bits of information and that here, but I'm trying to simplify it as simple as I can for you guys so that you don't have to have all that noise. There's so much noise out there with ICT stuff. There's years worth of material he's given us. And believe me, I've been through it all. You can simplify it, find yourself a nice simple entry, stay on the horse, man. That's all we're teaching is stay on the horse. Arrived late, glad I got here. Someone previously asked about XRP crypto, if you can. XRP. Let's look at XRP, UAL. XRP. I'm getting rid of UAL now. There's a potential reversal right here in UAL. That could be starting to come back into this range again. Anyway, XRP. This one here. Let's have a look at this. Oh, look at the deliciousness. Is this billion? 1.24 billion? Is that what that means? Sheesh. Kabibble. Look at this. Are you guys seeing this? What do you want it on? Give me the time frame you want this on. What's your time frame? Campione, what's your time frame you want me to do? We can arrange for her to be gone. Yeah, I hope you mean just you can arrange for her to be gone for breakfast, for lunch. I could just see Lambo. I can arrange this for you. I can remove your wife from the equation. I appreciate every bit of what you provided us to eat. I'll need to process it over time. Sometime, some pizza. Happy Sunday. No problem, Pablo. GTG. I'll rewatch. Gotta go stream and have a great Sunday. XRP USD. Is that the one I'm on? XRP USD. This one. Okay. All right. What time frame? Campione, what time frame would you want me to do the analysis on? I'm not going to tear it all down like I did with the other one. I'll just give me the time frame you're most interested in trading on, and I'll give you my thoughts on it. Hourly? Do you want it hourly? I said that above. We will all chip in for her brunch. It's funny because she just goes for two. She goes to IHOP. We have an IHOP here in Canada. She goes to IHOP, has 2 pancakes, 2 pieces of bacon, and that's it. It's $11. $11. And she just has a chat with her friends. Daily. Okay, thank you. Here's your daily. analysis of XRP. Quickly. Look at this. Look at this deliciousness. Looky here. Start chopping up your chart. When you get into the daily, your daily charts, start doing this kind of stuff. Look at the range that you're in and say to yourself, have we extended beyond or below a specific range, right? Always look at the range you're in. Find the premium and the discount boxes first. Mark those out on your charts. Okay? And mark them on your charts. And there's a little tiny one in here as well. That one will become more significant to me, I think. This one right here. If I can get below... Yeah, I'll have to take that. No, stick with my rule. I'm going to go with that right now. All right. So, for me to be bullish or bearish with this one, eyeballing it, I'd say it's about there. Let's double check. Ooh, I was so close. Okay. Stretch them out. Make sure you're not going to miss anything. It's like doing a dental exam, making sure you're looking in all the little crooks and crevices for a little bit of a fungus in there, a little pick around. All right, so first one. These are the small little things I'm looking for inside this piece here. All right. I like the fact that we've now taken out this low. We've got a little reversal sitting right in here. We've traded back up inside this first little range. From there to there, because you have to take the first swing, because that's the first objective you're going to, or one of the objectives you're going to aim for. You've already come up into the often trade entry reversal, and now we're reversing, and we came right back into this inversion. We've tapped it, and now we've frozen, closed on the high of it. We've just come back, so we've closed above it, we've come back in, tapped the bottom of it, and closed here. What I expect to see now is this open and start climbing higher. You're looking for the mean threshold of this last up close candle happens to be also 88%, and also the mean threshold of the largest up close candle right here. It's midpoint. So you've got several confluences. It's the midpoint of this one. It's the midpoint of this one. It's 88%. It's in a premium. And we have a small little fair value gap above you right here. And we've already ran up inside that. You see that? Now I'm going to get this out of the way because you see how I'm just using daily. You'll have to split this up into more later. So if you were looking at this, you'd say to yourself, where am I finding support and where am I meeting some resistance? What range am I in? What's the premium and what's the discount? Where am I finding support and where am I expecting some resistance? Where's my fail-safe going to be? If this goes wrong and I'm on the wrong side of this, where is the point at which that fails? On this daily chart. I am not on any other chart. I can see where it fails on lower time frames once I dig down deeper, but for this basic one here, Where does it fail for me? So based on what I've showed you guys so far today, the 11 of you who are sticking around here, if you're analyzing this XRP for Campione here, and we were pulling an analysis out of what I just showed you today, where's the support, where's the resistance, and where's my fail safe? Anybody? Because now you have to put it all together, right? You have to try and keep this mindset in here and say, I need to build a position. I need to build my entry. I need to build a fail safe so that that entry, if it breaks or violates a certain area, out of my trade, my rule is I'm done. I don't care what it does after that. I'll reevaluate it after it's made a rule, or after it's traded and followed the rules that I want it to do. I want the markets to act my way, I'm not going to react to the market. The market will act off of my liking, or I'm not getting in it. That's simple. So for me, you've come down, you've hit this level right here. You've just come back to this old high. You've tapped it. Hasn't fully filled that fair value gap on the downside. That's fine. Stay open. That's more bullish for me. So it's come back up. It's closed right on that level. Or just above it now. Oh, it's still active. It's still live. Okay, that's good. So now I want to see, go down into the lower time frames and look for that reversal that happened in here. So if that was coming down, I'd be looking for the reversal. And this is a live chart. So let's do this. Let's go down to the 1 hour chart now. Inside this little range from here to here, 70% optimum trade entry reversal, right? So when you caught this on the reverse and you're trading this 50%, 62%, you paid yourself on the way down, and now it's suddenly coming back against you, you'd be happy you did that. Because if you're on the wrong side of this and it's going higher now, you paid yourself on the wrong side because it's going to go higher. It's so fun. This is so fun. So anyway, right here, hourly. We're looking for confirmation now that we've had this daily. I'm looking for confirmation that this gets above a certain level for me to get bullish. So market structure shift is up here. So 2.3951. If it closes above that, I'm looking for higher prices. This is the premium box up here. If we close above here and come back down and give it a little tap like we did on the daily, this little trade above, come back, give it a little tap, and then get out of dodge. We're looking for the same thing on the hourly. Same thing here. Trade above, come back in, find support. Then I want to go long for this spot right here. So I'd be looking for a run up into here. If I clean this out, if I get a nice displacement candle, these three candles become my support level to push higher. And if I can get through the mean threshold of that candle, which held it last time, it ran down to mean threshold, rolled over and went back lower, broke market structure to the downside right here. You traded back up inside the candle for a perfect entry for a short, and you run back all the way back down into this candle's high. Look at that. Look at that. Freaking open. Oh, perfect. Nailed it. Reverse, come back up, get on top of this, looking for box to box trading inside this range here to there. That's what I'd be looking for. And that's all I'm going to give you on that one. That's what I'd be looking for, Campione. And if it trades below there, look for a run back down to this discount box. Oh, that's Walt Disney. Yeah, it's got to get above here. If it trades below it, go down to the lower time frames, because that means on the higher time frame, we're revisiting this down here. I don't want to see it come back down into there again now. So you want to see that hourly. Climb up on top of here and then start running for box to box trading, and then develop your fail safe around there. If it trades below there again on a close on that level, you're on the wrong side of this, it's going to come down and extend the range. That's the fail safe. Shorts below the breaker or below the inversion fair value gap. the breaker or the fair value gap? It depends on what you're looking at. If we have a, like if this ran up higher and this was the breaker and the fair value gap sitting here, I say the fair value gap and the breaker. The fair value gap is the last line, and a graded response. That high is the last line of defense to take a short. Because if you're on the wrong side of it and it trades above and comes back and taps it, you get to get that trade off for free at break even before it goes higher. That's why that's the best place to catch an uncertain one. It's the last, it's crappy. It's unfolded as the graded response for, you know, remember I always say your graded response is your A plus trade would be a tap here and go. Your B trade would be a tap of the body, mean threshold, and the last thing is that fair value gap. If it trades all the way through that, your D trade is the very last point or the high. And if it pops through that, you're on the wrong side of it. As soon as it pops back into it again, take your trade off because you're going higher. You're welcome, Campione. Box to box trading has truly put all of Michael's videos fall into place for me. Excellent, excellent. Learning tips is going to be is the missing link. It was the missing puzzle piece in for my mind to pick it, put it all together. Yeah. It really is about inversions and like to like. I used to call it like to like array. Like if I was going to go on this huge raid, I go like array to like array, way up at the top there. Or the first next range, like array to like array. If it gets through there, range extension, next like array is up here. So it's opposite, black to yellow, yellow to black, wherever the black is, black here. So yellow to black, extends through it, comes back into it. There's your discount, right? We trade through it. This is the breaker. So if you're at Steve, when you're asking about breaker or not, we have market structure shift, drop below. If we don't get this candle get back into here and that becomes a fair value gap, you want to say, I want to see institutional order flow. So I grade response again, grade A plus is just a simple come back up and tap that. Or sorry, a grade of A plus response, because now we've traded below here, would be a simple tap that and go. An A response would be an institutional order flow entry drill, which is just into the fair value gap. B response would be bringing you back into the mean threshold. Same thing I show you on the way down, or going on the way up, I should say. And then your D response is 75% of that range of the fair value gap. And then an E is a fail if it goes through it, right? So A plus all of it. So I just grade my response into that. And that was like consequent encroachment. And it is also this inversion. Body trades below the inversion. We do not extend the range. So you'll go back, you'll hear me say this to you. We look for a range extension. Ideally, and you'll hear later, earlier in, I remember saying this in the video. If we get a trade below the discount box, box to box trading, here's the first one, we traded through it, box to box. If we trade through the box, but we don't extend the range, I want to see it go back into the box before extending the range. It trades down. It does not give you a return to the range. It literally extends the range. So now you're looking for breaker, and the breaker happens to be inside with the fair value gap as well. So it trades back inside the breaker, all the way up inside that imbalance, and then finally extends the range here even lower. It's a rinse and repeat, simple, over and over and over and over again. It does the same thing. If that's all you look for, that's a 1 hour chart. We see that on a 1 minute chart so often. So often. So take your hourly and let's use our TIBs again on an hourly chart. Look at this 9:10 turn right inside that level. It's 9:30, right? 9:30. Look for the reversal. 14. Or here's your 11:30, 12. And then 16, 17, or was this 9:30? What am I on here? Is this hourly? Why is it only half hour? Well, that's 12 here. No, 9. That's 10:30. So there's your 10 turn. 11:30. These are weird times. 15. Oh yeah, this is just a regular trading hours. Yeah, regular. I was going to say it looked all wrong, but they were only regular trading hours. There's your 9:10 turn again. Yeah, it's hard to see when you got no. You got to go with electronic trading hours. It'll still work, but it's only gives you a short number of trade times. XRP. Does Tibbs work on some crazy? What is this? Is that that's a Bitcoin? It's a coin of crypto, right? Does it work in crypto? There's 20, 21 reversal. 7 turn reversal. 9, 10 turn reversal. Does it work? 12 reversal. 14, and this is there's 21 reversal. 00 reversal. 2 reversal. 4, 5, or no, that's 4, 5 reversal. 7, 6, 7 change direction. 8, here's 9 change direction. 10, 11, 12 makes a high. 4, 9, 10 turn again. 12, that's 11, 12, 13, 14. There's 16, 17 turn. 18, this is the squabblers. 21, it's 20. Change or continue on the direction. 11, 12, 16, 17, 18. Those are the squabblers again. 00, 3. There's the 9, 10 turn. Does it happen? Is it on an algorithm? Do you get it? Anything else? Any other one you want me to? My wife's not home yet. I've been here 3 hours. I'm having fun. And we're getting ready to hammer on this again tomorrow. We'll get to do it live tomorrow. Anybody else got a little asset you want me to look at? Thanks, Darren. This really helps. My pleasure, Shepard. My pleasure. Tell your friends. Invite them. Let's try and get to 2,000 people this year. I'd love to try and get at least break 2,000. I'd like to get 10,000 and more. But yeah, tell your friends. Invite some people. Let's share this stuff, man. Let's get out there. EU USD, please. EU USD. EU USD. Could we use this stuff inside the Forex? Next time you enter into the Robbins Cup, do this. There's your reversal. See? And I'm not form fitting this. We do this every morning. I'm just showing you exactly what we look for every morning. You break a low, you look for this reversal. Okay? This is a daily chart. Yeah. You break through it, you come back inside it, you're going to go long right there. You take out the high, pay yourself. Premium array from here to here. If you're just trading inside this range and you aim for the premium array, you hit it. You went all the way through it. You came back. You got another long right off of there. Range extension. You take out the premium box, which is the next one sitting above you here with this old high. Then you see this reversal here and you go, ooh, it's taking out some highs. It's giving you a reversal. It's traded below it. We trade back inside that. I'm going to go short. And where am I aiming for? Down here again. Premium discount, box to box. You trade through it. You go, ooh, look at that wick whipped all the way through there. Snapped all the way off of it and went from box to box to box to box again. So you went multiple box to box trades. Then it ran through that level one more time, came back down, and you go, oh, now I want to see that go long. And then it trades through it, and you go, oh, I'm on the wrong side of that. That could go short on me now. Where is it going to come back into? This order block right here. And now here's the part where you go, can it go longer or can it go shorter? This guy becomes the important one. For me, its mean threshold is pretty important. Anyway, trades below it. You go, I'm on the wrong side of this. Then it trades above it. You go, that's it. You're going to catch me on the wrong side of it, wrong side of it, wrong side of it. I'm going to wait for structure break, either high or low, before I consider getting back in this trade again. So it goes here, structure break below, comes back in, gives a little tap, extends deeper into the range to the premium or discount box again. Pay yourself. If it trades through there on the upside, it does. Comes back inside, taps this one. You just caught a massive launch higher. So all those couple of losses you took there more than pays itself back in that big run up there. So don't get hung up to say, okay, I'll just wait for the structure break. It does. Oh, good. Now I'll catch a short back inside this range here, and I'll pay myself on the way. Now, if it trades back through here, great. Now I'll get a long off of there. And now you caught a long. So where are we now, you say? Where now? We don't care about that old stuff, Darren. What the hell's going on now? We don't care about that shit. Tell me about what's going on here. So you're thinking, let's just review what we did again today. So now this is the only entry you had a chance to get in on right there for this takeoff right there. And it's precise on the daily. Go down to the hourly, do your homework, find the entry right here off that spot right there. Find it. You'll find it right down to a 5-minute chart, a 1-minute chart. I bet you'll see it sitting right there. So you've got this whole consolidation area. You say, if it breaks above that, comes back and taps this, I want to see it go. It doesn't. It takes off through this one, through that premium array, which is way over here. I think that's it. Oh, you've got to look at this whole thing right there. Right there. So there's an immediate rebalance right here. So that's the premium rate. Rips right through it. You go, okay. So now I always, like I've told you before, if you have one candle that rips through 1, 2, 3, take the very last one that it rips through and use that as your key off point. People go, well, what if it comes all the way back here? What if it does? If it's really bullish, it will only take you to the very last opportunity to get in. So it comes all the way back up, trades above this level, trades above these highs, and you go, I am going to catch this high or this order block or that old order block right there to go long. That's the highest body closed candle. And look at this, body closes above it, and then it literally goes boop, gives it a little tap right there, and leaves. So the very last one it breaches is the one you look for. Taps it, leaves. Now you go, okay, so it's ripped all the way through this fair value gap. It's ripped through here, here, and its mean threshold here. Comes back to the mean threshold of that, taps it, keeps going higher. We're now up through this breaker right here. You're inside this breaker and this fair value gap. If we get a body break above this high and use this breaker with this fair value gap, you want to go long. So what you're looking for is if that American dollar drops, and this order block right here holds. If it doesn't, remember,
If it doesn't, the failsafe is if it closes below that and use this as support, it's coming back into those levels that you never got an opportunity to get into before. That was the only one. So if you don't get in off of that guy or that guy, you'll pull the range now and say, what's 50%? 50% is back to this old high here. 50% or 62%, maybe this old high, or maybe it's this inversion that we didn't get a chance to get in on before. Always think that if it does come back, it's heading for this lot to give you those opportunities to go long. So if it does hold, then I'm looking for this. I'm looking for these old highs to get taken out right here. So let's take this right here and put it just above there. Say what logical level, if that price leg were to continue going higher, what logical level would this come back to? If I wanted to take just those highs, right there. So if this rolls over, takes this, I'm looking right there for my next price leg to take those highs. That's how I would reverse engineer that. Based on that big, strong price leg up. To me, they're not going to run all the way up there without wanting to push up to the premium array, which is sitting way up here. That's your premium array for your daily. Oh, it's daily right there. That's the upside. At minimum, I'd be reaching for it. And if it tapped that and started coming back down, I'd be fine with that. It doesn't have to reach for the highs. They're relative equal highs, so that feels like it's the major draw on liquidity. So it can be anywhere inside here. That is the pivot point. I want to see it hold it. Get above here, use this as support to reach for my premium array. And if it taps this and comes all the way back down into this discount array, I'll be looking for somewhere in here and then start running higher. Because if you reverse engineer that from here to there or there, if it runs all the way up to the top of that and reverses from there and comes back down again, 62% of this range puts you right on our box right there. See how you can kind of reverse engineer it? And, you know, who says it's going to go there? Who says it's going to do that? I just like to look for places I can build confluence around an idea. That's all. Doesn't mean it's going to do that, but if it does, that's the first thing I'm zeroing in on for a run back in there. So put those on your chart as key levels. Just put lines out there and see if I'm close. And put that line up there. Screen capture that. So you got the levels. And then just see if that comes into fruition. Whether or not that holds or comes back to here and goes higher. Or whether that goes to there, comes back down to here, and then goes higher. Or just stays inside that range. If that goes through there, I'm looking for this right here. If once we've hit that, I'm looking for this down here if that gives way. Does that make sense? Does that help? Dell? Was it Dell who asked me to do that one? Oh, it was Steve. Steven. Did that help you, Steve? Sorry, I'm giving you extra stuff here on assumptions about things I don't know, but I always like to try and see if I can figure out maybe what's going to happen in the future. I'll leave that on there just out of curiosity and see if I'm going to put this in here just because I'm curious. Doesn't mean it's going to work, but whatever. Remember that what the analysis that I give you right now doesn't necessarily mean it's going to go there. I just like the, so I'd like to see this from here. If we go here to here, then I'd like to see it go up to here, come back to here, then go to here, then come back to here, and then go higher. Or it will go from here to here and then down to here. Okay, so that makes sense. So it'll go here, up to that box, down, tap this box right here, run into the premium portion of the box. If it's going to retrace and not go higher, if it goes from here, it'll go here, bounce down to here, and then shoot higher. If not there, reverse, come all the way back down and give these guys an opportunity to get in again off this box here. It'll either go back higher, or if it just taps back into the 50% of that wick or 50% of the range, which would be right there, you'd expect to see it come lower into the discount portion. And then from there, it could either go through, up, down, and take out the low, or it could go up, find support at it, start pushing back up here, and start to work its way back up through that level before going higher. That's how I'm kind of seeing that. So I didn't give you anything super clear there, Stephen, but I tell you what I want first is this is a pivot point. So fail safe is got, you're just below that point. I don't want to see that candle there get taken. I don't want to see a body or even so much as a wick get through that level. I want to see it come back, find support here, start pushing for the premium box, pay yourself as soon as you break that high and see if that high gives you support to run higher. And if you run through here, find support at that, run for the equal highs, and you'll get your highs as well. So I'll leave that on there. Just when this will just be for us. When we look at this tomorrow, we'll be like, what the hell was that mess? You guys will have to remind me because I'm getting close to 60 now. I'll be like, who drew that? What the hell was that stuff? You guys will have to say, it's okay, Darren. Do you remember when? Just eat your dinner. Anybody else got something else they want me to look at? Use me and abuse me now while my wife is away. Thanks, Darren. It really helps. You're welcome. Yeah, that's awesome. Can't wait for tomorrow. I think shorts to retrace 50% of the current high. Steve. This current high, 50%. Yeah, that would bring you right back into this level we're looking at right in here. That would be nice. And you want to see a portion of that stay open to continue to the upside. You can fully fill this one. If there's two in a row, there's actually three in a row. The first one usually fills and we just come back and tap the second one. So you may see this go boop, right into there and give you an institutional order flow entry drill right off of that. And that gives you right into the old bodies and stuff here. So you might see just a little pop into there as well. That would be just into the 62%, just shy of a 70% optimum trade entry reversal for continuation of the upside. But either way, if we get below here, I'm looking for a retracement 50% for sure. Okay. So it doesn't necessarily, I want to see it continue doing that. But if it breaks this, this is out of the park right now. We're back into this idea. We're back into this idea. If it trades like from here, it goes down below it. Like to here, trades to it like that, and then comes all the way down into, let's say right there, and then goes higher. Could do that too. So that's narrative 2, narrative 1. And I want to see that hold, come all the way back here and then go up higher. That'd be really kind of cool. But it could go, just take off from there, take these highs and away you go. So just because I say I'll give you a narrative that I like, doesn't mean to say it's going to get there. I'm quick to change my mind. And I am a firm believer and I have the right to change my mind when something new, I get new information. And if new information puts me below here, forget what I just said. We're looking for a run into 50% or more. Tomorrow we start at, I usually start between 6:30 and 7 Canada time, Mountain time, which is 8:30 and 9 o'clock New York time. The show says I always start at 7 or at 9, but sometimes I get a little excited and start a little earlier or anywhere between anywhere between 8:30 and 9 o'clock New York time when we're starting. Yes, what the hell's that? Did I just get rid of my... I did. I deleted my Eesh. I did. Oh, I have to add one, don't I? I got the wrong chart. I gotta add a chart. Add an unknown chart. Oof, I don't want that much. I just want this one. And then we'll put this one on this end, and we'll call this end. I think I've got a way to do this. I always get frustrated by having to type in every single one of them. So if I go like this and I go NQ, and we go NQ futures March, we're going to go to June contract now. And we're going to go like this. And then I'm going to say, let's change this to this. Will this work if I do it this way? No, it didn't work. Oh, well. NQ. I have to type in each one of them. NQ. There we go. That'll be the daily. That'll be the day. Daily. I totally deleted that whole idea. Did anyone screen capture that? I'm gonna have to go back in and screen capture what all that work I put in on that damn NQ, and I missed it. Can I go back through all this stuff and hopefully change my mind? Oh, good. There it is. That's Euro. NQ. Nope. Nope. I lost it all. Shit. All that work I just put in. All that work I just did on NQ. That first hour or so I did on NQ. Shit balls. All that work I put in on NQ this morning, all those levels that I had lined up, I must have deleted them. Damn it. Oh, I totally deleted them. I hope you guys got them. I got to go back and do all that work again now. I hate doing that. Maybe it's not quite June yet. Do you guys still have it as June or March? Has it switched over to, oh yeah, that's more feasible. It has to be March still. I don't think the open interest is for June yet, is it? I haven't checked open interest rates yet. Okay, so daily. Let's go here. Jeepers, where are we at here? It's a tough one because there's so many overlaps in that one. This all inside this bigger one here. I do like this one though. Can you guys remember what I was talking about here this morning? I'm gonna have to go back and watch my own damn video. Okay, that will put me right in there on 50%. Got it. That puts me right on that upper box. That's right, because we were looking for this to go lower, weren't we? Next price leg lower. I usually just leave them on here. I don't save anything. I just leave them on, and when I close out my computer, it always saves for me. And this says save stuff here. Save all your charts. I don't know where the hell that it's unnamed. Dang. That's okay. It's good practice. I'm okay with that. So we got to get below this level for continuation on the downside. We're going to get back up here 50% on that range is right there. And then if we can get back up through that, then we're looking for this guy right here. Okay. I'm looking for this guy right there. I don't want to see you get through that. I remember when I took all of those monthly, weekly, daily levels. Oh, I got to go back over and do that again. That's okay. I get to watch my own video over again. So I don't have to brain squeeze that information out of my head again. Any other ones you need me to? Yeah, my problem was I opened up a new chart over the top of the previous one. I remember when I put all three of them together and we went looking for the SMT. That's when I deleted it. When I didn't, I went here. I went here instead of here and I should have made another chart instead of changing the chart here. So I totally screwed it by changing it here and not starting a whole new tab. That's okay. That's okay. Is there anything else you guys want me to look at, compare? Any charts, any specific assets, fair value gap, or not fair value gaps, but stocks, the Nifty 50, any other index you want me to look at? Anything? Anyone? Anyone? Bueller? Hit the like button if you like what we've done today. If you're new to our channel, by all means, subscribe, tell your friends, pop on in, stick around. We're here every day. We're trying to give you as much market analysis as we can, and it's all for free. And yeah, you just have to endure a bunch of commercials and stuff. Like I say, I got my first paycheck on the YouTube, $100. Actually, it was like 90 some odd dollars. That's all I got for this whole year and a half of doing this channel. I've got $100 so far. That's it. So don't begrudge me the $100 because I'll be giving it to somebody to pay for a prop firm. I'm not giving you the money. I'll pay for the prop firm for a month, and you see if you can make it work. I'll give you opportunities to try to give you as many opportunities as I can to get your trading going. And I appreciate you guys subscribing. So I will be plucking a person out of my subscribers, and I will be giving away a prop firm next week. And that's that. So that's my girl. Hello, lovey. What's up? I'm gonna have to I'm gonna modify these some of these templates here. Like this stuff, I don't need this crap here. So I'm gonna modify some of these. That'll be gray, and that'll be this one, and that'll be text, and that'll be weekly breaker. What's it call it? Weekly bullish breaker. Mean threshold. Then we're going to save that as save as weekly mean threshold. Mean threshold. Breaker. Okay. that mean threshold of that breaker is right in the middle of that overlap there on the daily. All right. This is all we need. Anything else you want me to look at? Nothing? That's it. All right. I'm out of here, you guys. Thanks very much. Appreciate your time. 4 hours. It was fun. I can't promise I'll do these every Sunday, but when I can, you're more than welcome to join in. And thank you for your time. Thank you for letting me bounce my ideas off you. Thank you all. I'm sending the love, man. I love you guys. There you go. Sending the love. I hope you guys have an awesome rest of your day. I will see you guys bright and early tomorrow morning. And thanks again for your time. Thanks for the likes. Thanks for the subscribers. I appreciate you all. Thank you. Thank you.